the last thing they need, given all the other problems they have right now, Dan?
Yeah, you're exactly right, Rish. And the extreme weather is hitting China in two different ways. It's increasing air conditioning demand. In provinces like Sichuan, power demand is up 25% from this time last year. And at the same time, it's drying up rivers and reservoirs. So hydropower is plummeting. And China has a huge fleet of hydropower dams. It's its biggest source of clean electricity. And so it's cascading through the economy. Sichuan has cut off power to basically almost all industrial users within its borders for the past 10 days. It's spreading beyond that. In places like Wuhan, where I was last week, they're reducing electricity use in billboards, in malls, in skyscrapers. Shanghai's Bund has shut down all the decorative lighting of its beautiful skyscrapers. And so economists now, they think that so far it's been contained in terms of GDP, but they're watching and waiting to see if it gets worse and how much longer it lasts.
What's the corporate impact? Just sum up for us what we've seen and heard so far from many corporates, not just, which camera am I looking at? This one? All right. Yeah, from both local and multinationals here, Dan.
Yeah, so you've seen companies like Toyota and Cattle, the world's biggest battery maker, shut factories for at least a couple days. Tongwei, which is a major manufacturer of polysilicon, which is used for solar panels, has had their production impacted. Tesla's factory in Shanghai has complained that some of their suppliers are in the Chengdu area, and you know, they said if we can't get power back up there, we might have to slow down production. So it's yet another supply chain problem in China. And you know, as you guys know, the supply chains here have been battered around all year by COVID, and this is just the last thing that China's economy and Xi Jinping needs going into the party Congress this fall.
Yeah, I think people just don't really quite understand just the impact, right? Sichuan, I think you mentioned it was the population of Germany, in terms of the economic size of it, it's about, what, like Turkey. Dan, can you walk us through a little bit more about what the longer term implications are, especially when it comes to hydro projects in the region?
Yeah, and so this is the thing, you know, even when the weather starts to cool down and the current power crisis eases, it's not like these hydro dams are going to immediately replenish. So we're looking at, you know, to take you back earlier this year, when it was rainy, hydropower output was up really hard or really strong, and so China was able to burn less coal and gas in the first half of the year. But now looking into the second half, hydropower generation is probably not going to recover, and so you're going to need more thermal power to fuel China going into the winter, and that means China's going to have to get back on the global market, buy more coal, buy more gas, compete with European countries that are trying to wean themselves off of Russian energy. And so you're going to have this sort of cascading effect on the energy markets, where you're going to really see an increase in demand in heating fuels going into the winter.
Dan Murtaugh in our now cool offices in Beijing, our Asia Energy reporter there. Rish.
All right, let's have a look at the first word news. We've got the U.S. holding its first in-person meetings in Los Angeles next month with ministers from 13 Indo-Pacific nations. The U.S. Trade Representative is saying that the gathering under the Indo-Pacific Economic Framework will be used to discuss trade, supply chains and clean energy as well. Of course, this grouping is designed to counter China's influence in this part of the world. A court in Pakistan has asked former Prime Minister Imran Khan to appear before it next week. The court will review whether remarks he made at a public rally about the government merit a contempt of court case. The political drama threatens to undermine Pakistan's quest to convince the IMF to release a $1.2 billion loan. Indonesia's central bank delivering a surprise 25 basis point rate hike as it tries to manage inflation and stabilize the rupiah. It's the country's first rate increase since 2018. It was only predicted by 7 out of 31 analysts or economists surveyed by Bloomberg. Bank Indonesia Governor Periwarjio took on a more hawkish tone as he warned inflation was likely to exceed its 2 to 4% target this year. Tributes are being paid to Julian Robertson, the billionaire founder of Tiger Management, who's died at the age of 90. Robertson became one of his generation's most successful hedge fund managers and a mentor to a wave of investors known as Tiger Cubs. By the late 1990s, his funds had $22 billion in assets and he had returns averaging annually 32%, but a wrong-way bet on the yen led to losses and he closed the funds in 2000. Julian Robertson, who died at the age of 90 there. Right, let's look at the first word news.
All right, coming up in terms of our inequality segment here, we're talking a little bit more about Singapore. That repeal of a law banning gay sex will impact the LGBTQ community in the city-state and the stigma they are facing there. We'll discuss with a nonprofit for Singapore's queer community, Pink Dot. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Okay, here we go. Just a look at cross market in Southeast Asia right now. Sing dollars 140. Weaker there against the U.S. dollar, weaker on the equity market mix across the region, though. Just to note there, too, and since we're looking at Jakarta, that surprise rate hike from BI yesterday, RBI, Bank Indonesia yesterday.
The other I.
Yeah, the other I. INR, right? Yeah, okay. But yeah, okay, let's stay in Singapore, guys, and bring it back.
Yeah, absolutely. The city-state this week announcing a scrapping of this colonial-era law, which banned sex between men, while there is broad public support for the change. The issue of gay marriage, well, that's an entirely different story. We had a survey conducted this week. Around 55% of respondents say that they did not support same-sex marriage. 31% said that they did, though.
All right, let's start with the good news, though. Our next guest is an organizing committee member of Pink Dot, the group that pushed for the repeal of that Singapore sex ban. Clement Tan is joining us from the Lion City. Clement, thanks so much for joining us. How big of a breakthrough is this for Singapore, and how far do you think this ban actually goes?
Well, thank you for having me. I think no matter how you want to slice this is undoubtedly progress. The government has rightly acknowledged the generations of harm, trauma, and hurt that has caused the LGBTQ community. They've taken the right step to finally discarding a colonial-era law, a relic that we'd inherited. And so for all of us hearing the news last Sunday by Prime Minister Lee, it's given us a sense of overwhelming relief.
So what's next then for you guys?
Well, our focus right now actually is just coming together as a community and processing this news. For actually a lot of us, especially from those in the older generation, many of us didn't actually think that this day would arrive even in our lifetimes. There's a lot of generational trauma that we actually need to start healing from. We also think things might get a little bit uglier in the lead up to the parliamentary debates. Already after the announcement, we heard segments of society which were very upset about this news. So we will actually be watching the debates very closely and making sure that the community's mental health is prioritized. We think the work still also goes on. LGBTQ organizations like Pink Dot will continue to address immediate and urgent areas of discrimination that the community faces. This is everything from bullying and harassment in schools to discrimination in the workplace, media censorship, and the like.
Clement, I mean, baby steps. I mean, this one's been a long time coming here, but, it does throw up a lot of other questions with regard to the recognition in legal terms of just a relationship between a man and a woman and a woman, doesn't it? Because, for instance, you're an expat, you may have a partner. Can a visa be applied to that partner, even though they're not married? Can somebody who is a partner of somebody who's in hospital go and see them, for instance, as well? And, legally speaking, these are all huge grey areas, and the answer to a couple of those questions is no.
Yes. So I think one thing to sort of point out is that the government has since clarified after the announcement on Sunday that this constitutional amendment that they're proposing is very specific in nature. What they are not going to do, they've since clarified, is to enshrine any sort of legal definition of marriage between a man and a woman into the Constitution. Now, that is something that certain religious interest groups in Singapore have been campaigning very strongly and publicly agitating for. Just want to clarify that that is certainly not the case. If such an outcome had passed, that would have been very alarming. Now, what exactly the government is going to do with this amendment that they're proposing, I think that remains to be seen. We don't have the text in front of us. We don't know not only what it would look like, but how this will be discussed in Parliament. So we will be paying attention to that. And obviously, from Pink Dot's perspective, any further attempt to hardwire discrimination into legislation is something that would be disappointing to us. But we're just going to withhold judgment on that for the time being, and we'll see how the government follows through.
Could you elaborate more a little bit more on that, Clement? That comment you made on hardwiring discrimination into legislation. Are you seeing any signs of that about to come?
So certain religious interest groups continue to campaign for enshrining the definition of marriage into the Constitution. From us, that's concerning because the Constitution is secular in nature. Any attempt to sort of hardwire any sort of religious values in it should be concerning from a democracy and secularity standpoint. We also don't wish to see the hands of future Parliament be bound to any sort of decision that's made by social mores today. Yeah.
There was that survey we mentioned about, how people are feeling about same-sex marriage, and it was actually quite interesting, right? Actually, a majority actually oppose same-sex marriage in Singapore. I have to get what your take is on that. How have attitudes actually changed, if any, Clement? And is there anything that the corporate community can do about changing those perceptions?
Sure. I think there's still some ways to go in society here in Singapore to tackle other issues that the community faces. 377A, I mean, and that's really a testament to how large the shadow of 377A has loomed large. It has been this thing on our backs for such a long time. All of the campaigning and advocacy is centered around this one issue because it's really been the linchpin for so much of the hurt, the trauma, and the lack of progress here in this country. So now that this is finally done, we can all breathe a sigh of relief. We can take a moment to reflect on all the work that's been done, but then the road to further equality, we know it's long. We know that further conversations need to take place in this country before we can reach a consensus on them. And I think what the government has done with repeal is to resoundingly take that step forward. So we're very cautiously optimistic about the future, even though we're not quite there yet for certain other areas of social consensus. We think things will change.
Yeah, I mean, Clement, I was going to ask you, how do you change hearts and minds? But, again, getting back to the point I was making earlier, okay, sex between men is recognized, but it's the relationship between men which is not.
Yes, and unfortunately, that's one of the things in the current state of social discourse and rhetoric that I do feel it's a bit disappointing. There's this talk about how we want to protect the institution of families and marriage from gay people. And it's like, well, I have a partner too. I have families too. I don't necessarily see this as necessarily opposed. It is something that we all yearn for. I think we're all humans that yearn for connection, yearn for stability, have loving relationships that eventually want to be recognized. This is a matter of dignity. This is a matter of something that Singaporeans should constantly question and reimagine for ourselves.
Clement, certainly dignity at the forefront. Clement Tan, the organising committee member of Pink Dot, the group that pushed for the repeal of the Singapore's same-sex ban. All right, go to checking markets after this very, very short break. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
You need to step in and buy the Hang Seng Index today. Basically, what we're seeing is that there's a correlation between geopolitical tension, as we can measure it, and what's going on in the index. And I think we've basically passed the peak of geopolitical tension, at least for now.
All right. That was Mo Apabai there from Citigroup earlier, saying, yeah, if there's any reason to buy the Hang Seng today, it probably is the fact that, there's just so much bad news already priced into these markets, as he said. And when you talk about these Greater China markets, bad news actually means good news, he says. For the rest of the world, bad news is still bad news. But you know what? It could be just today that we could be seeing that buying, right? Because we are seeing maybe a pretty big tropical storm heading our way.
Well, yeah, we could. I think the authorities are looking at perhaps increasing it from a T1 as it is now to a T8, and that would be between 6 and 9 this evening. That's not going to be particularly good for the Hang Seng, one could imagine. But I think he's looking longer term and how this Hong Kong story evolves as we perhaps normalise at some stage anyway and just be open to the world fully.
Yeah, previously when someone said T3, I'd think, oh, that's the terminal at the airport. Now all we have is typhoon signals, right? But I guess
you should
to your
know
point.
there are only 2 in Hong Kong.
Back to Hong Kong, here we go. Hang Seng Index, 235 points. No offense to Mo, if he heeded his advice, he'd probably lose a little bit of money. But of course, that was a chat earlier with him. We're now back to the levels of March when Beijing came in and intervened verbally and with a lot of promises, of course, there to come out, stabilize the market. And it did stabilize, but here we go. We're back to those levels. And yeah, we are, guys, in a lot of ways headed into the weekend, right? And if the market is shut, and it's a big if, with a T8 tomorrow, it's almost like going into a tunnel, not knowing if there's an exit, right?
Yeah, meanwhile, we got Bank of Thailand governor been talking. We've had an interview with him coming up. We got, at the moment, they're talking about no unusual capital flows. Of course, the Thai baht, which has not had a great year, but has done well lately. Saying the Thai baht depreciation is driven by dollar moves. We know about that. Going on, actually, to say that they see limited risks coming from the Federal Reserve, tightening here as well. And they would say this, but they're not behind the curve on rate normalization.
Yep, no unusual capital flows, year-to-date inflows positive. So they're still seeing maybe a bit of resilience when it comes to Thailand's economy here in the face of a very hawkish Fed that we might be continuing to hear here, especially when it count down to Jackson Hole. So yeah, we'll get more, of course. We're going to have our exclusive interview, don't miss it, with the Bank of Thailand governor coming up in the next hour.
Yep, before that, a brief look at markets right now and property. some of these big names, and there's certainly a story there within at least the property space of investigations going on. I'll get to that in a moment, though. 9 cents of 1%. We talked about the Hang Seng. Commodity markets are seeing a bid today. If you missed it, Brent is back, at least the most active contract is back to about 100 right now. Equity futures are mixed. Volumes are not there so much. And yeah, Thailand, of course, opens up in the next hour, as with India. So we'll see what happens there. And of course, as Yvonne is pointing out, do not miss that exclusive interview with the Bank of Thailand governor. That's coming up in about 20 minutes from now. Stay with us. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Should we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
It's such an interesting new world. The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas. I want our team to reflect the customer that we aspire to earn. I know that our teams ship their culture with every product that they ship.
Strong enough to stay. We will never break. As the water rises and the mountains shake, our love will remain. We will never, no, never. We will never, no.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Musk may have a whistleblower on his side. Twitter's former head of security has come forward alleging there are egregious deficiencies, quote unquote, in how the company handles personal data and doesn't even know how many bots there are. U.S. lawmakers have vowed to investigate how this plays into the $44 billion lawsuit. Plus, Zoom's transition from an essential pandemic tool to an enterprise business juggernaut might take longer than expected. The company reported the lowest sales gain in its history. Zoom's CFO joins us this hour. And Meta learned about the FTC's lawsuit over its Within VR acquisition via a tweet. Could this be the new norm under Chair Lina Khan? We will get to all of that in a moment, but first, the third down day for the markets in a row. Bloomberg's Katie Greifeld with us now. Katie, walk us through the day.
Third down day, but it was a pretty mixed bag overall. If you look at the big benchmarks, you had the S&P 500, the NASDAQ 100 falling slightly, just a few tenths of a percent. Then you look at the Philadelphia Semiconductor Index, the stocks, really the big outperformer today, up 0.7%. But that was really just a bright spot in what was a sea of red. You look at some of the speculative corners of the market. We have the ARK Innovation ETF up there, down about 0.5% or so, as we sort of just wait for the big news at the end of the week. Of course, the Federal Reserve Jackson Hole Summit, still have a few days to go. Let's look, though, at the meme stock craze, check in on that craze, but in a different way now. You can see Bed Bath & Beyond down a whopping 62% over the past 4 days. Again, we think about where we were this time last week. It was a much different story, but that seems to be a thing of the past just for now. Again, if you think about what we're seeing in Bed Bath & Beyond shares, but broadening out to some more fundamental stories. If you look at some of the other big movers in the market, somehow it's still earnings season. We heard from JD.com earlier today. It was a beat and a raised quarter, sort of quieting some of the fears that we've been having about the Chinese slowdown when we think about what we saw at Alibaba. JD.com shares up over 3%. We also heard from Palo Alto Networks yesterday. Again, really strong billings numbers. That was reflected in shares today, soaring by more than 12%. Twitter, though, this is where all the drama was today. Emily, you walked us through that whistleblower emerging. Perhaps a win for Elon Musk. Of course, Musk's lawyers have already issued a subpoena requesting that whistleblower.
Drama indeed. Katie, thank you. We're going to talk more about that right now. Twitter's former head of security blowing the whistle. His name is Peter Zatko, and he's filed an official complaint alleging egregious deficiencies in the way the platform handles personal data and bot accounts. Twitter refuting the claims, calling them opportunistic. How could this change Elon Musk's attempt to get out of that $44 billion deal? Musk's lawyers, as Katie said, have already subpoenaed Zatko. There's a hearing scheduled for Wednesday. Here to discuss, Bloomberg's Jeff Feely, who covers the courts of Delaware for us, and our own Kurt Wagner, who covers Twitter. So, Kurt, Who is Peter Zatko and what has he claimed?
Yeah, this is someone who's incredibly well respected in the security industry. He came to Twitter in late 2020. You may remember, Emily, that in the summer of that year, there was a big breach at the company. A bunch of very high profile accounts were hacked by a teenager. And Jack Dorsey, then the CEO, made a big plan to bring someone in with some real kind of reputation and stock in the industry. And so his, goes by Mudge as his nickname. And he was there until early this year, 2022, when he was actually fired or dismissed by CEO Parag Agrawal. So very recently in the building at Twitter.
So he was there very recently. Twitter responding to his claims saying, this is from the CEO Parag Agrawal. I believe you obtained this memo. They're reviewing the claims, but what they've seen so far is a false narrative riddled with inconsistencies and inaccuracies and presented without important context. Give us more details on what he is claiming.
Yeah, I mean, he's essentially saying that the company has not taken the appropriate steps to protect user data. He's saying that they haven't taken appropriate steps to update, basic software on their data servers, right? And the big thing, and this is the thing that, Elon Musk is jumping on, is that he says, well, the company doesn't actually know how many bots it has on the platform, right? It's a little bit more nuanced than that. We can get into that. But generally, when you hear that and you're Elon Musk, your ears perk up because this is what you have been arguing all along, is that the company doesn't actually know how many bots it has. And here is a top senior executive who reported to the CEO, essentially reaffirming what Elon's been saying.
So, Jeff, Musk's lawyers have already said, we want to talk to this guy. How could this potentially change the case? What's going to happen in this hearing?
Well, first and foremost, let's stop for a second and say that it's way too early to know whether this guy's got the goods or not. People are going to have to dig in and see, whether there's meat on the bone for these allegations. Now, tomorrow is not about this guy. It's about allegations that the Musk people have made, that the Twitter folks are hiding witnesses with specific knowledge of the spam and the bot accounts, and they're offering up, executives and directors who don't have specific knowledge. Judge is going to decide whether or not Twitter has to make, the people with the goods available.
So, Kurt, I know you've been talking to a lot of sources. There's been some reaction from within the company. What are people saying?
Yeah, I mean, there's a number of current employees who can imagine aren't very thrilled, right, to see someone who was so recently on the staff level at the company now coming forward and making these accusations. There's been a lot of speculation as to the timing, right? I mean, we are right in the middle of this very contentious deal, and suddenly this feels like a huge wrapped gift for Elon Musk. So there has been speculation there as well. But, ultimately, this just adds even more kind of chaos and confusion to what's already been a very uncertain time at a company like this.
Jeff, how often does it happen that, someone comes forward claiming to have, the smoking gun, at the perfect time in a high-profile business case like this?
It has happened before in a case called Acorn Fresenius. So it's not unusual to have whistleblowers emerge when there's publicity about these big M&A fights. And it's just, everything has been, drama central in this case. So it's not a bit surprising that we've had this development.
So what are you watching for? What happens next?
Well, again, we have this hearing tomorrow, which will decide whether or not he gets more access to the bot stuff. Going forward, we're basically keeping an eye on the process of gathering ammunition. Both sides are gathering ammunition to make their case. And we're hurtling toward October 17th, the huge, trial of the century in Wilmington, Delaware.
You are going to be very busy that day, my friend, along with our own Kurt Wagner. Thank you both for giving us that week. I should say thank you both. Obviously, you'll keep us posted on the drama. All right. Coming up, HBO gets a huge win with House of the Dragon. Just how good an omen is this for streamers? We'll discuss next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Game of Thrones fan club was in the house Sunday for House of the Dragon. The premiere drew 9.9 million viewers on television and online, making it the best ever series debut in HBO history. It's becoming a battle of epics between HBO and Amazon, which is about to debut its Lord of the Rings spinoff, The Rings of Power. Joining me now, Rich Greenfield, partner at Lightshed Partners. So House of the Dragon. Rich, what did you think?
I mean, this is what HBO does best. I mean, big, epic, super expensive, tens of millions of dollars an episode. But this is the bread and butter of HBO. And I think the big question for investors is going to be, how does this evolve over the course of the next 12 months? Obviously, as you know, MLM Media was acquired by Discovery, or essentially the companies came together into a merger. And at some point next summer, Discovery Plus is going to basically be, mashed together with HBO Max, probably still called HBO Max. And we're going to see sort of how those two brands come together into one service. But I think when you look at something like House of the Dragon, this is everything that HBO is known for over the last 20 years. Incredibly well-produced, high-end premium content.
Well, we're already seeing some of those growing pains as this, Discovery tries to merge these two cultures. What's your expectations about how it's all going to play out?
I mean, look, you've got a company, the reality is for Discovery, this was a save, right? I mean, Discovery did not have a future as a standalone company. They were going to be in deep trouble just being in the cable network world, especially in the nonfiction sort of. That world was not going to look pretty over the course of the next 5 to 10 years. And I don't think anyone really believed in the future of Discovery Plus. And so because AT&T needed to get out of the Warner Media business, it sort of is this, really unique opportunity for sort of a kick save for John Malone and David Zaslav to sort of wind up being in control of one of the world's largest media companies. The negative is they have a lot of debt. And so that's why you're seeing sort of a lot of cost cutting and a lot of sort of retrenchment strategically. But I think the question is going to be, this is an incredible group of assets, and how much of their focus is on building for the future. There's no doubt in my mind that the future of television is going to be streamed, right? Like linear TV is dying. And so how does Warner Media, which still has a tremendous amount of cable network, broadcast cable network assets, how do they transform that into the future? And can they do it with that much debt load? Obviously, you're seeing a lot of investors who are skeptical of their prospects so far.
Does the success of House of the Dragon bode well for Amazon's Lord of the Rings project and all the money and time that they spent on it?
Well, I think it's funny that you bring up Lord of the Rings, because it's actually a great example of the different strategy that you're now seeing at Warner Media, or sorry, at Warner Brothers Discovery, I should say, versus the old management team. Because if you go today, Emily, or if any of the viewers who are watching this turn on Amazon's, Prime Video, they can actually watch all of the original Lord of the Rings. Now, you'd say the original Lord of the Rings, those are Warner Brothers. Those should be on HBO Max, and they're on HBO Max, but they're now also on Amazon's Prime Video. So you see this culture now that's really changing inside of Warner Media, where instead of making it the exclusive home of content, they're really going back to more of a licensing model where, sure, it's on HBO Max, but now you can also get it on Amazon Prime, whereas that never would have happened under the prior management team. You're seeing a real focus on licensing to generate profits versus the only sort of North Star was streaming, meaning HBO Max. HBO Max is no longer the sole focus of Warner Brothers Discovery. They're looking to make money any way possible, including licensing to third parties like Amazon.
We're also seeing these streamers make more moves into sports. News today that Amazon is going to show its Thursday Night Football in bars and restaurants as part of its deal with DirecTV. And, you talked about, for the first time ever, there being more viewers on streaming than on cable. Is sports really the only way to take these streamers to the next level, to that next generation or chapter of growth?
Well, look, sports is a great way to get people to come in, right? If you have Champions League, which is what Paramount Plus just acquired, it's the only way you can watch Champions League is you've got to sign up for Paramount Plus. If you want to watch WWE's WrestleMania, you have to have Peacock. If each of these platforms is buying exclusive sports rights. Now, the negative is obviously you don't own these, you don't own the content. You have to keep fighting every 3, 5, 7, whatever the years are. You have to keep fighting for this content because you don't own it the way you own a piece of content. Netflix owns Stranger Things forever. Like, it's not disappearing. They don't have to go rebid for those rights in 3 years. So sports is really a double-edged sword. But I think what's interesting, Emily, is it's the last thing that's been holding the bundle together. Like right now, you can't name an entertainment show on traditional television that anyone cares about. The only thing that's sort of holding the traditional multi-channel video bundle together has been sports. And even now sports are finally starting to move to streaming. And I think that's why you've seen a record pace of cord cutting, 7-8% now. Cord cutting is becoming a real problem for all of these legacy media companies because they've moved so much great content, including sports, to streaming. And the tech companies are coming in and bidding on these sports rights. We think the big next thing you're going to see in the next 4 weeks, we believe Apple's going to buy Sunday Ticket, which has been on DirecTV for years. We think that moves over to Apple. And so you're seeing real massive seismic change that is going to have big problems for anybody in the cable network business in 2023.
Now, I know you're a prolific tweeter, and we were speaking earlier about this whistleblower that's come forward that could potentially give Elon Musk an edge in this battle royale to get out of that $44 billion deal to buy Twitter. What's your take?
It comes down to essentially one fundamental issue is, did Twitter falsify its public filings? Because the deal that Elon Musk agreed to didn't talk about bots or the percentage of bots or any of that. It basically just relied on the validity of Twitter's public filings. And if you read Twitter's public filings, it says, we make a lot of assumptions in how we look at the bot number. We think it's under 5%, but we could be wrong. If Twitter knowingly knew the number was far larger than 5%, and every one of Twitter's filings was essentially fraudulent because they were basically filing fraudulent documents with the SEC, then Musk has a case. Now, I find it hard to believe that Jack Dorsey and Ned Siegel and sort of the entire management team at Twitter has willfully for years been filing false SEC documents. It's obviously possible. I think it's unlikely. Unless those documents, unless those filings with the SEC are knowingly false, Twitter has already said they could have made mistakes in how they did this. This is not an exact science. If that's the case, Elon will be paying $54.20.
Right. And to be clear, we're talking about the number of bots that advertisers that actually see advertising that are counted in MAUs, not the number of bots overall. That's what they're referring to with that 5%, less than 5% number.
Correct. There are certainly good bots that are part of Twitter that you actually would want there, but in terms of sort of the spammy part that shouldn't be counted as actually, monetizable DAUs, as Twitter calls them, MDAUs is actually the term Twitter uses. They have said repeatedly that the percentage of bots on a quarterly basis is sub 5% based on their analysis, but that analysis could be flawed. You would have to believe that they knowingly knew, meaning they factually knew the number was north of 5% and chose to do different disclosure in the SEC filings. That's the only way Musk gets out of paying $54.20.
Right. Okay. Rich Greenfield, Lightshed Partners.
Thanks for having me.
Always good to have you here, Rich. Thank you for stopping by. Coming up, Zoom's big bet on the enterprise. Will it pay off? We're going to talk about that and more with Zoom CFO Kelly Steckelberg next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We are seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
Zoom was the pandemic's golden child, but that transition from an essential COVID-era tool to an enterprise business platform may not happen as quickly as some expected. Let's talk about all that and more with Zoom CFO Kelly Steckelberg here. Kelly, great to have you back with us. So let's talk about the good news and the less good news. Obviously, you're seeing growth from enterprise customers, but you're losing consumers and small businesses. Let's start there. When, how, and where do you expect that to stabilize?
So great to see you, Emily. Thank you. As you mentioned, we're really pleased with the performance in the enterprise, which grew 27% year over year. We can talk about Zoom Phone and the very strong performance there. But in our online segment of the business, as you mentioned, there certainly were some headwinds, a lot of it due to strength in the dollar, as well as impact that we're seeing from the war in Europe, but also just slower acquisition of new customers at the top of the funnel, which is having impact as people are moving around the world again and going out to happy hour with their friends rather than doing that over Zoom.
And slowing sales growth among corporate customers, is that a sign of slowing corporate demand? Is that because of the macroeconomic issues we're seeing?
So we had a very strong quarter from an enterprise perspective. Our overall bookings came in stronger than we expected, and revenue at 27%. Now, we are starting to see our enterprise sales cycles moving towards more normalized enterprise cycles, which meant they were a little bit more back-end loaded in the quarter. That led to higher than expected deferred revenue, though, just a little bit less contribution to revenue in the quarter itself. But Zoom Phone was very strong performance. We crossed over that 4 million seat mark in August, which we're excited to talk about. We had 2 record deals with seat size of greater than 125,000. And we're seeing strength in some of our new products, including Zoom Contact Center and Zoom IQ for Sales.
Bigger picture, there's this narrative that the pendulum is swinging back to the office. Apple calling workers back to the office next month. Employees are pushing back, yes. But you know, this is still the policy, at least as of now. I know Zoom did its own survey on hybrid work. You found that executives still want that hybrid work environment. How are you adding all of this up and trying to figure out how this will translate into demand?
Yeah. So the great thing about Zoom technology is it enables work both at home and in the office, and they're both really important. So we see organizations recognizing that they need to maintain their Zoom licenses for their employees that are working at home, but also our technology like Zoom Rooms, Smart Gallery, workplace reservations allow them to then interact with those employees that are in the office in a very inclusive way. And so having the right technology in your conference room is becoming more and more important every single day. We've all become used to seeing everybody's face on a square, and so technology like Smart Gallery enables that. Even if you're the one, like me, I've moved out of the state of California, sitting in Texas, sees everybody that's in that room and feels really included in that conversation. And so we're excited about the prospects of hybrid work, and Zoom technology is there to support it.
So just about 30 seconds left, Kelly. What does the next year of growth look like to you? Where does most of that growth come from, quickly?
So certainly it's going to come from our enterprise segment, and we're also focused on lots of new initiatives in the online segment that will drive it first to being flat, but eventually a growth driver as well.
All right, Kelly Steckelberg, CFO of Zoom. Always good to have you here, Kelly. Thank you for stopping by. Coming up, the FTC is breaking with tradition, letting companies learn about lawsuits the hard way, without any notice, that is. Plus, we'll take a look at the cybersecurity landscape with Palo Alto Networks' Nikesh Arora. He joins us next. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek, they could be pretending they're running a store or a pizza parlor, they could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The FTC is breaking with tradition in its clampdown on big tech. Meta says it learned that the Federal Trade Commission was suing the company over its Within virtual reality acquisition via a tweet. The FTC typically gives companies a chance to meet with commissioners and argue their case before filing a lawsuit. Here to explain what happened, our very own Alex Barinka. What happened indeed, Alex?
Yeah, Meta executives and lawyers apparently found out from this tweet that the FTC was suing them in kind of an unusual case that I'm sure we can kind of talk about in a second. Basically, what typically happens in these situations is if a deal's large enough, they have to file documents to the FTC, which our sources told us they did. They filed hundreds of documents and data points. And then if a suit is imminent, usually there are depositions before that happens. No depositions happen in this case. And the company was alerted to this via tweet. I will say the FTC initially didn't comment on this story. They did get back to us today saying that they followed typical practice by notifying the company after the fact. That being said, our sources say this was unusual to not have any inkling that they would be coming for them to sue to block this virtual reality deal.
What does this signal about the FTC's approach on future cases?
Yeah, it's a bit of a different approach now under Chairperson Lina Khan. You'll remember Khan is a Biden appointee who was basically brought into the agency that is meant to enforce antitrust laws, and she's taken a pretty aggressive approach. This suit in and of itself makes kind of a little used argument called a nascent competition claim. That basically means that they are suing to block this deal on the future potential of this small and growing industry, and they've alleged that Meta's acquisition of Within and its app Supernatural can actually tamp down competition because it doesn't give the tech giant the opportunity to use its resources to create more competition in this space. So a lot of unique things happening with this case for sure, but it all alludes to this kind of more aggressive posturing of Khan and the Democratic commissioners on the FTC against big tech companies.
I spoke with Congressman David Cicilline yesterday and asked him about Lina Khan and her approach and this lawsuit in particular. Some critics have said this is such a small company. Why is the FTC bothering with this? Of course, Meta has said the deal would increase competition. Take a listen to what Representative Cicilline had to say.
I don't think we can take any representation made by Meta or Facebook or Mark Zuckerberg seriously. time and time again, they've been found to be engaging in anti-competitive behaviors.
He went on to argue how much Meta and Facebook in particular are anti-competitive and how supportive he is of Lina Khan's approach. You know, of course, that's just one lawmaker, but what do we know about the support that Lina Khan has in Congress to continue on this route?
You'll remember the House came out with a 2020 report basically pointing out that Meta alone had acquired more than 100 smaller companies in the decades prior. And this within case is the only time the FTC has actually sued preemptively to stop one of those deals. For folks like Cicilline, I know they might be looking at things like the ongoing back and forth that Meta still has regarding the Instagram and WhatsApp acquisitions. That issue is also with the FTC from Lina Khan's predecessor. So I think that folks on who take that kind of approach that he was talking through there think that the FTC perhaps hasn't done enough on the antitrust side to make sure that these giant tech companies aren't basically hoovering up everyone out there to either tamp down or assure that they have what they said in this lawsuit is a monopoly on a potential future market.
All right, Alex Parinka, thank you for your reporting on this. Of course, we'll continue to follow. Now, moving on to the world of cybersecurity. Shares of Palo Alto Networks soared as much as 12% Tuesday after the network security company reported strong quarterly results, saying it expects sales to increase by at least 25% in fiscal year 2023. But can the cybersecurity landscape, will the cyber landscape sustain its growth? To talk about all that and more is Palo Alto Networks CEO Nikesh Arora. Nikesh, great to have you back with us, as always. So look, very positive earnings report, a beat, good forecast. You seem to be bucking the trend because we've heard a lot of bad news from other tech companies. How so?
I don't know what I don't know, Emily. Maybe I don't know something. But you know, we're seeing noise. We're not seeing enough signal out there telling us that there is impending doom. Look, we see inflation. We see macroeconomic trends. We saw a version of this 2 years ago with the pandemic. People thought that the floor was going to fall away from under us. Oil went to $0. Revenues vanished for companies, and we seem to have powered through. So I don't think this one is as bad as that when it was 2 years ago.
Do you expect demand to keep up, though? Or could companies tighten their belts over the next few quarters? And could that impact how much software and cybersecurity services they want to buy?
You know, it was interesting. I've been talking to investors all day and a whole bunch of market commentators about our stock and what we see in the market. And the pandemic set about a series of transformations in technology because companies saw that they were wanting in many areas. Their e-commerce infrastructure was not up to snuff, which they had to upgrade because they're trying to sell everything on the web. Their customer interaction mechanisms were not in place because every customer wanted to interact with them digitally because they didn't want to touch people or see people anymore. So a lot of technology transformation projects started in the midst of the pandemic, even a whole bunch of the cloud transformation, and hybrid work. So if you add all that up, we unleashed a series of technology transformations and couple that with the tremendous amount of cyber activity we've seen and the awareness of that. So we're seeing a tailwind for security, which is, I think, more secular and might get dented on the margin, but I think it's still one of the safest and strongest sectors to be in.
Overall, how would you describe the threat landscape right now? Obviously, there's this ongoing war on Ukraine, but the potential, huge cyber apocalypse that, some were warning about with that hasn't necessarily materialized. There's ongoing tension with China. Of course, how do you see these global factors impacting the threats?
Well, look, I think if you step back and look at it, every one of our companies has become digital. And every time you have digitally enabled businesses, you open the door for people to be able to enter from wherever they want. On top of that, we made everybody work from home. So suddenly your attack surface is what we call it, suddenly expanded. Every employee's home is a potential attack vector. Everybody's laptop is every interaction that you have with your customers digitally is a potential way of you getting hacked. And we've seen that. We've seen that in ransomware. We've seen that in business email compromise. 70% of the incidents last year were driven from business email compromise or ransomware. Ransomware spam, sums have gone to $1 million per ransomware event. Every 4 hours, there's a ransomware leak on some website somewhere. So clearly, this is not just a nation-state threat, it also is an economic opportunity for small, hackers or hacker groups to build consortia to start making these economic demands on a bunch of people from a ransomware perspective. So you're seeing the threat landscape get more adverse. At the same time, nation states are looking at preparedness because of the Ukraine situation. Say, am I ready to withstand an attack? We haven't seen a cybersecurity apocalypse because we've actually had real lives lost and devastation caused in Ukraine. However, do not underestimate the amount of cyber activities that's gone down in terms of trying to bring the Ukrainian websites down. And white activists going after Russian sites because they don't like what Russia is doing. So you are seeing a tremendous amount of cyber activity we haven't seen before.
There's a new whistleblower in social media, and I'm just dying to get your thoughts on this. This former employee of Twitter, former head of security there, claiming negligent security policies, egregious deficiencies in how they're handling personal data, that they don't know how many bots there even are. There's been some pushback on this. This sounds like something that could be happening within a lot of companies. What's your take on this?
I don't know the particulars of the situation at Twitter. I read about it probably just as recently as you did. I don't know what's happening there. I will say that one of the things we've been canvassing for and hoping for is more scrutiny and more awareness at boards about the threats of cybersecurity. I think cybersecurity is the biggest business continuity risk in the 21st century, and I don't think boards are well prepared to understand the magnitude, understand the impact that can be had, and really to be able to assess whether their individual company is up to snuff in those capabilities. So I think it's a need of the hour. I think the SEC is looking at various mechanisms to be able to create regulation around how people have to disclose cyber activity and cyber readiness, just the way we do in audit committees and finance, et cetera.
Well, there's also this number that we've been hearing over and over again, 600,000 open cyber jobs. I mean, you mentioned it's the responsibility of boards, but is it the government who should be stepping in here to help fill these jobs? Is it companies?
Actually, I heard 3.5 million, Emily. So I'm glad if it's 600,000.
It's a lot.
It's a lot. Yes, it's a lot of jobs, and we're almost at full employment. So yes, we need to make sure that I keep ample trained people. I think this is a dual-edged problem. This is not a singular problem of finding 600,000 cybersecurity enthusiasts or professionals. I think the fundamental problem is we have not applied ample automation in security, which requires a bunch of clean data, requires a bunch of integration, a bunch for platformization for cybersecurity, which is what we're trying to do and a whole bunch of others are. I think the only way we solve the cybersecurity problem is if we can build AI that actually stops these attacks whilst they're happening. Today's model is not going to work. Today's model is something happens, we collect all the data in large data lakes, and then we have people go hack them look at them to see what actually happened and manually try to find the problem. I think those days are over. Requires a lot more automation. We think we can solve a majority of that 600,000 or 3.5 million people problem by doing that. Yet we also need more cybersecurity trained professionals.
Now, so curious for your thoughts on this last one here. You, of course, were Masayoshi Son's number 2 long before he launched the Vision Fund. Now we know he's lost tens of billions of dollars on some of these tech investments. What do you make of this, and what do you think the legacy of Masa and SoftBank will be in spite of this?
Oh, look, Masa is a resilient individual. He's been through this before. He went from boom to bust to the last internet bust, and he reinvented himself. And the one thing I loved about him is that he has immense appetite for risk. And his appetite for risk and his ability to forget his failures is what all of Silicon Valley teaches us. So hopefully he can recover from that and go build it back himself. And I think last time he was down to $1 billion. I think he's a lot more this time than last time. So I have faith in his ability to resurrect himself. But yes, I do think he got a bunch of companies at the wrong end.
All right, Nikesh Arora, CEO of Palo Alto Networks. Good to have you back, Nikesh. Thank you for stopping by. All right, coming up, how the crypto winter, coupled with an energy crunch, is impacting Bitcoin mining. More on that next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Strong enough to stay. We will never break as the water rises and the mountains shake. Our love will remain. We will never, no, never. We will never, no.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Time now for our crypto report, and the usually volatile Bitcoin has gotten stuck trading within a narrow range ahead of the Fed's annual Jackson Hole meeting later this week, hovering around $21,600. Mike Alfred, board member of the Bitcoin miner Iris Energy and the crypto-focused investment firm Eaglebrook Advisors, talked to Kaylee Lines on the Bloomberg Crypto Show earlier to talk about the market's impact on Bitcoin mining.
It's certainly been a difficult time, and I was with a bunch of the miners in Miami about a month ago now, and the mood's a little darker. The Bitcoin price being under 20,000 obviously isn't good for anyone because profitability tends to flip negative for a lot of the large miners around those levels. The cost of machines has gone down though, so if you're a buyer of machines here, you're getting a much better price than you were a year ago. And energy prices, while they're going up, they could certainly, be held down a little bit by macro uncertainty, at least in the U.S., where there's sort of an oversupply of energy. So I actually believe, just based on the hash ribbons, which is a metric that looks at the 30-day moving average of the global hash rate relative to the 60-day, it just flipped positive again in the last week, right after being negative since sort of some point during July. I actually think the capitulation phase is over. There were miners that were literally buying Bitcoin at 40,000, and then they puked that Bitcoin back into the market at 20. I think that speaks to the general strategy that people should have around their balance sheet here. I think there's two strategies that sort of work well. One is just selling your Bitcoin every day, the way Iris Energy does, and that way you can grow just out of cash flow, or like Hut 8, just holding the Bitcoin indefinitely, but using equity and debt strategically and not taking on too much debt, and then growing at a reasonable speed so that you don't get caught at the wrong part of the cycle flat-footed.
We think that in mid-September, the merge may finally happen. Ethereum will move from proof of work to proof of stake. How does the upcoming merge affect your view on how you want to be investing in these kinds of companies?
Well, I think the Bitcoin only miners are always going to be a good bet, because if you believe in a truly decentralized monetary system, it will not function properly under a proof of stake model. So as much as Ethereum could be an interesting currency for doing NFTs or doing DeFi or whatever, it's not going to be the same thing that Bitcoin is if it moves off of proof of work. And so I don't think it changes anything with the thesis. Like if people want to speculate speculate on NFTs, right? That doesn't bother me one bit. I'm a free market capitalist. But if you want to own a truly hard asset with a supply cap that cannot be disrupted, that cannot be sort of taken over by any one party, you kind of need to stick with proof of work. And therefore, I think Bitcoin mining, at least again in North America, has a great future.
Mike Alfred there, Iris Energy and Eaglebrook Advisors with Kaylee Lyons. Coming up, what is quiet quitting? The concept getting a lot of attention among young workers trying to change office norms. We'll discuss next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Workers are fighting executives, pushing for a full and even part-time return to the office. The latest example coming from Apple. More than 200 Apple employees have signed a petition demanding the company continue its flexible work policies instead of its planned return to the office September 5th and requiring employees to come in 2 to 3 days a week. They want hybrid schedules with direct reports rather than a corporate blanket policies. This comes at a time when the term quiet quitting is making the rounds on social media. The idea is not that employees actually quit, but instead do the bare minimum that the job requires to maintain a healthy work-life balance. Here to discuss, Daniel Chait, co-founder and CEO of Greenhouse, which offers recruiting software as a service. So does the Apple story resonate with you based on what you're seeing from your clients, Daniel?
Yeah, we've heard a lot of companies who went, in the pandemic, they all went remote and distributed. And then now when things are changing again, they want their employees back in the office because they think that being there and being able to see those employees somehow equals culture or somehow equals productivity. And I think what's interesting about the Apple story is what the employees are saying is we're being productive, we're giving our best, and the way we can be the most productive is by working in this more flexible way. So it's kind of, you hear it in the same sentence as this kind of quiet quitting conversation, but it's actually, to me, more a story of the power of employees to create value and the role of the company in either helping them do that or trying to change how they do that.
Well, and you'll see whether Apple acquiesces here in any way, but does it seem that the pendulum is swinging back to the office and executives or those who want workers back to the office are having more power than they did a year ago when we were, just starting to work through Omicron?
we'll see. Look, the pendulum has been swinging for decades in favor of employees who have more power and more control than ever before. And so companies are finding themselves in this position of having to be people first, and taking that on as an opportunity and as a strategy has been very successful. Now, some companies or leaders want it to be the way it was, or somehow try to return to that. I think some of them are finding themselves stuck, and ultimately value is created by talent and people. If you're, as a leader, not able to put those people in the best position to create value, then you've got a real problem. And so, look, I think there are some companies like Apple who have a huge investment in real estate and a big state-of-the-art office, and they want to position that as an asset and as a strength to those employees. And some employees want that. For some people, no doubt, getting up, going to an office, being with other people is really attractive and really helpful to them. But for others, it's not. And so I think what you're more seeing is, multiple different kind of talent pools developing, where some talent wants to work remotely, other talent wants to work in the office, and companies are kind of having to choose which part of the talent pool they want to play in. But in all cases, they have to choose based on what the talent wants. It's the people first that's driving these business decisions.
How is this impacting hiring and retention? I mean, are you seeing a lot of people quit, a lot of people voting with their feet?
Well, look, unemployment is still at historically, very low levels, and I think it's easier than ever to get a job, right? People can just swipe left on you and swipe left on someone else, and they're working at a new company. They don't have to get a new, commute. And so what we're seeing is, people are resigning, and in higher numbers than they had been, but people are getting hired faster than ever. And I think we've got almost 2 job openings still for every 1 job seeker in the market today. So it's still a talent market, and companies are doing their best just to try to keep up and compete.
Let's talk about quiet quitting and this idea of just doing the bare minimum, not going to try too hard, not going to overexert myself because, you know what, I'm just going to do my job. I'm just going to do my job. What impact is this having?
Yeah, look, there's nothing wrong with doing your job and not, ruining your life in order to achieve it. But at the same time, at the point where it kind of moves over into this area of sort of quitting or taking advantage of the system, it becomes a problem. I think what this has shown is that for many companies, they don't really have a great way of measuring what a good employee actually is. They don't actually know what output or what quality really looks like. And so they use this thing of how long are you logged into your laptop, or are you sitting in your cubicle, instead of knowing which of my employees are actually great and what do I do to inspire discretionary effort. I think the companies who are people first focus on those questions, have an advantage, and they don't have this problem of employees dropping out, without telling them.
All right. Well, certainly lots to continue to follow. Greenhouse co-founder and CEO Daniel Chait, appreciate you stopping by and giving us your take. And that does it for this edition of Bloomberg Technology. Coming up later this week, Wednesday, do not miss my conversation with Microsoft Gaming CEO Phil Spencer. And check out our podcast. You can find it anywhere you get your podcast, Studio 1.0 and Bloomberg Technology. I'm Emily Chang in San Francisco. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of a family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Daybreak Middle East. Our top stories this morning: fresh PMI and housing data stoke fears about the U.S. economy. The Fed's Neil Kashkari says it's very clear that more tightening is needed.
With inflation this high, I'm in the mode of we need to err on making sure we're getting inflation down and only relax when we see compelling evidence that inflation is well on its way back down to 2%.
Oil rallies by the most in a month as U.S. stockpiles shrink, adding to the tightening supply outlook after Saudi Arabia flagged a possible production cut. The U.S. will announce another $3 billion in arms for Ukraine later. That as the country marks a tense Independence Day and 6 months since Russia's invasion. And we get the latest numbers from the UAE-based conglomerate Majid Al Futtaim this hour. The CEO worried about inflation and global economic slowdown. His answers at 8:30 a.m. on Bloomberg. As it goes 8 a.m. across the Emirates, warm welcome to the show. Spooked is the word that went through my mind. The oil markets are spooked. The bond markets are spooked. And the equity markets remain, one could say, febrile. This is the oil market. It took a royal decree to spook a 4% rally rally, nay 7% at one juncture, and then a drawdown in the US API data is what delivered the alpha to the oil market, back above $100 in the oil market, and that is critically important to the psychology of markets of Brent. Has ABS, His Royal Highness, put the OPEC put at play? The line in the sand, according to Javier Blas, or just simply they prefer oil at $100? Take your choice. In terms of Citi, they're saying supply sanctions will kick in later in the year from Russia, but it won't be as bad as you all think. The market thinks 3 million barrels of oil and products will come off. No, they reckon about 1.25. So the oil market is spooked. Then you take a look at the short end of the yield curve. Just listen to those words from Neil Kashkari, and it is very, very evident that we are in a completely unbalanced situation. We need a Volcker-esque style. So still, the door is not closed to those Volcker-style movements and narrative from the 1980s. Rates hit 20%. Unemployment went to 11%. What is a Volcker-esque style move? ACA 2022. The data is slowing. House sales, the slowest since 2016. PMI services collapsed for a second month. So again, you saw this draw down on the data and a rally back in yields on the Kashkari narrative. Let me leave you with a snapshot of the equities. The question I asked myself in the car this morning was, are we at a natural pausability? A natural pause. The PMIs are collapsing everywhere. That is a natural response to an invective from the central banks, which is raising rates and constricting money supply. Home sales are the slowest since 2016. By the way, a mortgage, 30-year rates in 2021 were 2.65%. 30-year rates this morning are 5.65%. That is what takes the heat out of an economy. Juliet Sally revs it up in Singapore. Jules.
Hey, Manus. Well, we are certainly still on Jackson Hole watch here too. So a little bit of caution creeping through in these markets with regional stocks down for a fifth session, the longest losing streak since around June. Once again, really only those energy players seeing a pickup. But it's all about the currency market as we continue to see this dollar strength. Now, you did have a stronger than expected fix from the PBOC today, suggesting that authorities are not that keen on the depreciation we've seen in the yuan nearing that 2-year low, but still seeing the offshore yuan weaker today. Where there is some upside is in the Korean won after that jawboning from the finance minister. It is rising after 6 sessions of losses. And Haslinda was just speaking to the Bank of Thailand governor too. And look, they're saying that the tourism recovery worries them the most, but that there is no need for large hikes. Still seeing some weakness coming through in the Thai baht amongst EM currencies today. Let's have a look at what we're seeing in Hong Kong too, because this is one market very much under pressure. And early in the session, in the morning session, we actually saw it fall through that level that we've had, the levels, I should say, of May. The next level of support really to watch for is those levels we saw in March when Beijing was forced to intervene in the market. You've got a miss by Xpeng really weighing on those EV battery maker companies too. And in addition to Jackson Hole, as David Ingles points out, Hong Kong investors need to weigh possible market disruptions, including potential closures to the exchange in the remainder of the week as we have a weather warning in Hong Kong. Manus.
OK, Jules, we will see you throughout the show. Juliet Sally there in Singapore. To the Fed speak. Minneapolis Fed President Neil Kashkari says action from the central bank is still very much needed in the fight against inflation. He spoke at a gathering at the Wharton Club of Minnesota.
When inflation is 8% or 9%, we run the risk of unanchoring inflation expectations and leading to very bad outcomes that would cause us to have to be very aggressive, Volcker-esque, to then re-anchor them. We definitely want to avoid allowing that situation to develop. So with inflation this high, for me, I'm in the mode of we need to err on making sure we're getting inflation down.
And that was after fresh data showed that US business activity contracted for a second straight month in August. And Karen looks at the data and the rhetoric on the global slowdown. And if I look across Japan, UK, US, I mean, this momentum, I've used the word pausability, a bit of a play on plausibility, but pausability, it makes sense. It's just a question of whether this is the foothills of a deeper acceleration to the downside.
Well, it certainly feels quite synchronised now, Manus, and it does feel as though it is deepening this global slowdown, at least on the manufacturing side of things. You mentioned there the US PMI. There was particular weakness there in new orders and in hiring intentions. The hiring intentions is interesting because the US jobs market has been so strong. Could be pointing at weakness coming down the tracks there. European factories obviously struggling under the weight of those sky-high energy prices, and similarly weakness in this part of the world in Asia. In Australia, the services sector contracted there for the first time in 7 months. So when you take it all together, at least on the manufacturing side, there's weakness. It's leaking over to services in some areas. It is starting to show the weight of both surging inflation and rising interest rates, and it all adds to the idea that the global economy now does seem to be slowing down at a faster pace than people expected only a few months ago.
Now, if we take our mind back, we got a little bit more information about what was discussed at the last Fed meeting. You've got two chiefs there backing a 100 basis point hike last month, and then I've got Neil Kashkari, the archdove, pivoting to this narrative about, channeling that we may need Volcker-esque style responses. So this 100 basis point and bigger rate hikes is certainly not a thing consigned to the dustbin, is it?
Not consigned to the dustbin. What the regional Fed officials were talking about was a hike in the discount window, which isn't the Fed funds rate, of course, that we all talk about every day. Nonetheless, the point is those regional Fed officials, they mix with business people, they mix with households. Their signal to the top in Washington was that you guys need to go hard, and that's why they voted for that 100 basis points move in the discount window. And like you mentioned, Neil Kashkari was on the dovish end of the Fed spectrum, and he was considered to be one of the doves, and now he's out there saying they still have a lot of work to do and still need to go aggressively. We will, of course, get that fresh signal this week from Jackson Hole when Chairman Powell speaks. But let's not forget, it's going to be all about US inflation and jobs data, which will come in September, and that will surely have a lot to say about the September decision.
Well, I'll give it to Jan Hatzius, really. I love it. Powell won't go all Volcker on us, so let's see what level of Volcker he delivers. And thank you very much, Enda Curran in Hong Kong. And we will be live at Jackson Hole later in the week for the crucial Powell speeches. The interviews come in through thick and fast. Kansas City Fed, Philadelphia, St. Louis, Cleveland and Atlanta all line up to speak to Bloomberg. Well, the US will announce another $3 billion in arms for Ukraine later today. That as the country makes a tense Independence Day and 6 months since Russia's invasion. Bruce Einhorn is with me. So Bruce, this is more than just symbolism in terms of the arms commitment to Ukraine from the US. Put it in context for us.
Yes, Manus, this would be the single largest aid package, military aid package that the U.S. has provided to Ukraine since the start of the war 6 months ago. It also comes a day after German Chancellor Olaf Scholz announced a German package that will total about 500 million euros, especially significant given that President Zelensky of Ukraine has in the past been quite critical of Germany for not stepping up and doing as much as Ukraine wants in terms of providing aid. So now we're seeing that both the Americans and the Germans are making additional promises right now as Ukraine prepares for a very tense Independence Day, the first time that's happened during the war with Russia. Yesterday in New York, there was a meeting of the Security Council to discuss the situation at the Zaporizhia nuclear power plant, the largest in Europe, currently controlled by the Russians. Both the Russians and the Ukrainians accuse the other side of attacking near the plant, endangering it. The UN has called for demilitarization of the plant. The other major development that we saw was Russia has accused Estonia of assisting the assassin of the daughter of Alexander Dugin, who's advisor to Putin, saying that Estonia allowed this assassin to cross into Estonia. There's been no evidence provided of this. Estonia has rejected the charge. The significant thing about this, of course, is that Estonia is a member of NATO, and so it could lead to potentially further escalation between Russia and the NATO allies. Manus.
Well, certainly those flashpoints are going to be focused on, aren't they? Bruce, thank you very much. Bruce Einhorn with the very latest on the Ukraine war. Now, there's a whistleblower at Twitter he was fired from Twitter earlier in the year, but the stock tanked nonetheless by 7.5% yesterday, 7.32%. His name is Peter Zatko. The allegations from him as a whistleblower, he's a former executive, is that there were egregious deficiencies in Twitter's defenses. This was defenses against hackers, lax approaches to security. Now, he warned that a lot of the servers were running out-of-date software, but here's the real kicker, and this is the issue of national security risk and interest. Roughly half the company's workforce had deep access to Twitter's controls, and this plays in many ways right into Elon Musk's hands. I should just say to you that Twitter have delivered a response to these allegations from this whistleblower in regards to access and poor defenses, etc. And this is what Twitter had to say. Look, what we've seen so far is a false narrative about Twitter and our privacy and data security practices that is riddled with inconsistencies and inaccuracies, and it lacks important context. It should also be made very clear that Zatko was fired in January for ineffective leadership and poor performance. But going back to part of his accusations, and this is at the heart of Elon Musk's point, which is what are the real number of followers and participants on Twitter. Cash bonuses of as much as $10 million were tied to increasing the number of daily users. Twitter prioritized growth over reducing the number of spam accounts, and that goes to the heart of the Elon Musk pulling the ripcord on his bid for Twitter thus far. So that is the very latest twist and turn on Twitter. Let's get back to Juliet Sully. She's got the first word headlines from around the world. Jules.
Manas, former Malaysian Prime Minister Najib Razak will serve a 12-year prison sentence after losing his final appeal in a trial related to the multi-billion-dollar 1MDB scandal. The court ruling prevents Najib from contesting in the next general election that must be held by September 2023. He'll go down in history as the first Malaysian Prime Minister to be convicted and imprisoned. A Pakistan court has asked former Prime Minister Imran Khan to appear before it next week. The court will review whether remarks he made at a public rally about the government merit a contempt of court case. The political drama threatens to undermine Pakistan's quest to convince the IMF to release a $1.2 billion loan. London's Gatwick Airport says it will end capacity caps this month, bringing some relief to travellers. Schedule reductions at the much larger London Heathrow will continue. On Monday, Heathrow's biggest carrier, British Airways, removed 10,000 flights there this winter. The airline is dealing with staff shortages and insufficient demand on some routes. And tributes are being paid to Julian Robertson, the billionaire founder of Tiger Management, who has died aged 90. Robertson became one of his generation's most successful hedge fund managers and a mentor to a wave of investors known as Tiger Cubs. By the late 90s, his fund had $22 billion in assets and annual returns averaging 32%. But a wrong way bet on the yen led to losses, and he closed the funds in 2000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manas.
Jules, thank you very much. Still ahead on the show today, the CEO of the Muljan Majid Al Futtaim, Alam Bujani, joins me for their earnings and the results for the first half of the year. In case you didn't realise it, it is Jackson Hole this week. So let's get Max Bondori's halfpenny's worth on what will happen. This is Bloomberg.
The second half of the year has begun, and it is a totally new story. The risks are a fresh new cycle of further volatility, greater inequality, and further inflation challenges, with markets worrying that the Fed's delayed aggressive tightening will be forced to stop due to a higher recession threat. This could prompt 1970s, 1980s style stagflation, which could continue contributing to worse and longer stocks and government bonds bear market.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
I think it could be a couple of years. I mean, really? If you get to the mid threes or maybe even a little bit higher, and then you stay there, because I think while inflation will look a lot better a year from now, I think it'll still be significantly above the target, and ultimately they do want to get back down to pretty close to 2%.
Goldman Sachs chief economist Jan Hatzius is there. We're counting down to Jackson Hole this weekend, and the markets are assessing the likely pace of subsequent Fed tightening. So the latest data shows that economic activity weakening from the US to Europe and Asia, and that's reinforcing the concerns that the world might tip into recession. Let's bring in Max Bonduri, CEO and founder of SGMC. Max, I just want to lean into the narrative from Jan Hatzius, the chief economist. We get to the mid-threes and we pause there for quite a time, and the market is perhaps ill-conceived that he's very resistant against rate cuts next year. Do you see us getting to the mid-threes in the first instance on rates and then settling in there?
Well, definitely we're going to get to at least 3. Then how much higher than that will depend on inflation data and, of course, in terms of growth. But definitely we're going to get more hikes than what probably the market is currently expecting. And definitely cuts which are going to be happening later than what the market now expects. Now, what we've seen is there's this narrative that we have finally hit peak inflation, and that's very likely to have happened, and inflation is likely to come down. But we're going to remain at levels much, much higher than what the Fed is comfortable with those 2%. You don't get from 9% to 2% overnight. Therefore, that pivot, that dovish pivot that many investors are hoping for or have been pricing over the last few weeks, that's going to take longer to happen. So yes, we do see the rates going to higher than 3%, not that much higher, anything around 3.25, 3.5 probably. And then we'll have to see how data reacts from there.
Do you think we're at the beginning of a soft or hard landing? Home sales, the slowest since 2016. Services, the second month in a row at 44.1. And the other, I think, most egregious fact of all is mortgage rates this morning are 5.65% for a 30-year mortgage. A year ago, that was 2.65%. That's brutal.
Absolutely. Well, I mean, the whole point of raising rates is slowing the economy down to bring inflation down. So undoubtedly, that's going to have a negative effect on growth. A recession is very likely to happen in the U.S. Now, the question is just how deep it will go and how long it would last for. As of now, it seems like
how deep do you think it'll be, and how long will it go for? How deep will it be, and how long will it go for?
We think it's not going to be a major recession. We think that we're going to see probably another 1 or 2 quarters of negative growth, and that's likely again to put pressure on asset valuations. But as long as the unemployment remains as low as it is now, it might inch higher. But as long as that unemployment number remains low, that's likely to not have such a severe consequence on the overall economy as maybe previous recessions have had. So we're probably somewhere between a soft and a hard. I would say a medium landing, We're not as bullish as saying a soft, probably not as bearish as a hard. It's going to be tougher times ahead. But we're probably, again, not going to see hard recession if things remain the same. And of course, there's no geopolitical increases with respect to all the risks that we're seeing.
Now, the argument, of course, is that active management will win. You are actively de-risking the portfolios and incrementally adding to cash. So just put some scale around that. How much more cash are you accumulating? And where are you actively de-risking? Are you pulling off growth stock trades?
So we have actually added relatively aggressively in the month of June because we thought the correction was overdone. So at the end of June, we were roughly fully deployed. So we had no cash on portfolios. We're now have been taking back that exposure over the last 2 weeks. We're currently sitting, of course, depending on risk profiles, but just to give an average, around the 20 to 25% liquidity. We also have hedges in place. And the places where we've been taking profit is, of course, where we had added the risk end of June, which was those higher growth names and those sectors which have been overly hit. Even look at the large tech mega caps, but also all the semiconductors, the cybersecurity space, the clean renewables energy, which had a very good jump. So all of those places, that's where we're taking profit, getting a little bit of dry powder, seeing what happens in Jackson Hole, seeing what happens during the month of September, which statistically tends to be relatively hard, and then look to deploy should there be a further correction from here.
Now, whilst I see gas prices at the pump coming down for 70 days in a row in the United States of America, I'm looking at the oil markets, which managed to trade above $100 yesterday. Prince Abdullah's bin Salman invecting I would say, the OPEC put. You're seeing oil back above $100. That's going to be rather worrisome if that holds above this $100 level for the world. Is it, Max?
It's definitely not great news for growth. At the same time, it was expected. So it was unlikely you were going to see a big fall in oil prices. I mean, the other commodities are a little bit different. But especially in the current environment that we're living in now, where energy is required and is required today. So yes, renewables, it's great, but it's more of a longer term kind of trade and energy provision. So when you need energy now, definitely oil is one of the main places to go to. Therefore, it's not surprising that it remains high. Clearly, that will put additional pressure on inflation. But again, $100, we have seen much more than that over the last few months. So as long as the price of oil can stabilize around current levels, then that's not definitely a negative going forward.
Okay, and I'd say probably most of the GCC would be happy with $100 oil as a rounding price. Max, thank you so much for being with me this morning. The CEO and more than a half penny's worth of a thought on the economic situation in the United States of America, the founder at SGMC Capital. My guest on the markets, plenty more ahead, right here on Daybreak Middle East.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
In times of existential angst, where do you want to be? Of course, King Dollar. Brown Brothers Harriman talk about, this is the dollar, by the way, coming within a whisker of the July high. It's in the GTV library for anybody that wants to pop in there and rummage around. The dollar smile remains intact, i.e. Brown Brothers Harriman says the dollar wins in either case, either a slowdown, in which case the dollar outperforms because that is the least worst shirt that you want to wear. Let me just show you what is going on the FX currency. So the dollar's up by an eighth of 1%. Cable still under pressure at 118.16. Now it's off the lows of yesterday. JP Morgan Private Bank say 114 is eminently tradable, which is where you saw it in March 2020. Absolutely within reach if the gas prices continue to do what they're doing. Now on the euro dollar, vol has been rising. It's now getting a little bit more expensive to hedge yourself on the downside on euro dollar. 99.31 and euro yen, because we all want to channel our inner Tom Keane deep down. I have it on good authority. That's what the pros look at, 135.95. Quick snapshot of risk on equities. The pros look at that as well. You've got equity futures struggling this morning just for a upside. The PMIs are brutal around the world. The question is it a hard landing or a soft landing? Or as Max Bonduri says, somewhere.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
You will put a woman on Mars. You will be the first chief crypto officer, because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak Middle East.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. No one covers the world like Bloomberg.
Does the sense will get to 7% in the coming months? Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Daybreak Middle East. Our top stories this morning: fresh PMI housing data stoke fears about the US economy. The Fed's Neil Kashkari says it's very clear that more tightening is needed.
With inflation this high, I'm in the mode of we need to err on making sure we're getting inflation down and only relax when we see compelling evidence that inflation is well on its way back down to 2%.
Oil rallies by the most in a month as US stockpiles shrink, adding to tightening supply outlook, and Saudi Arabia flagging a possible production cut. The US will announce another $3 billion in arms for Ukraine later. That as the country marks a tense Independence Day 6 months after Russia's invasion. And we get the latest numbers from the UAE-based conglomerate Majid Al Futtaim. In just a moment, the CEO joins me. Is he concerned about inflation? Is he concerned about a global economic slowdown? We ask Alain Bajani. Markets are moving. Juliet Sally is there. In Singapore, Jules, what have we got?
Well, it seems investors here are worried about an economic slowdown, Manus. We are lower for a fifth session. It's really those energy players, the only bright spot on the regional benchmark index, which is lower for a fifth session. So that's the longest losing streak in around 2 months. And particular weakness coming through once again in China and Hong Kong. We've been seeing a lot of sell-off coming through in these EV players, the likes of Xpeng after it missed. And the Hang Seng index, which is on the lunch break, down by 1.3%, actually falling through the lows that we saw in May. Now those lows of March inside, and remember that is when Beijing stepped in to intervene in that market. Elsewhere, we are watching a broadly stronger dollar weigh in on some of the currencies, the likes of the Thai baht, the yuan, which is holding at a near 2-year low. But have a look at the Korean won, rising today up by about 0.1%. That is its first gain after 6 sessions of losses, as we had some more verbal intervention from Korea, really trying to stem the weakness that you are seeing in the won, holding at that 13-year low, Manus.
And Goldman's are slashing their estimates for foreign fund. Let's start that again. Foreign fund flow. Did you put that alliteration?
Better you than me
foreign
on that
one. Oh, I'm not doing well here. Foreign fund flow.
No, I'll pick it up.
Into Chinese stocks. Go on.
That was mean of me to write that for you. I should have said foreign capital inflow, but yes, they are cutting it by around 2/3 for this year, citing concerns about tightening liquidity globally. They're expecting that foreign investors may net purchase around 25 billion of Chinese A shares via the trading links from Hong Kong, and the foreign net inflow to reach around 65 billion next year. So far, we've seen overseas investors net buy about $8.5 billion of Chinese shares this year. This according to Bloomberg data. Goldman also, though, expecting foreign ownership of Chinese shares to actually double by 2030. So a longer play is that you are going to continue to see momentum in this market. They're suggesting 9% of foreign ownership by 2030, up by about 4.4% currently, and also lowering their forecast for mainland buying of Hong Kong stocks to around 50 billion. That's from an earlier estimate of around $75 billion. Manus.
Jules, thank you very much. And I should be able to manage the odd bit of alliteration. Juliet, thank you very much. Juliet Sally there in Singapore. Well, Majid Al Futtaim is a leading operator of shopping malls across the Middle East, Africa and Central Asia. And the first half results are on the tape. The company reported a 15% increase in revenue to 18 billion dirhams. Meanwhile, there was a 73% increase in digital grocery retailing and a boost to the hotels, along with other parts of the business. The Expo effect. What's next? CEO Alain Bajani joins me now. Alain, good to have you with us.
Good morning.
You're looking suntanned, relaxed.
I've been preparing.
You've been preparing. There's nothing to fear. I'm reading this piece of paper. The numbers are there. Everybody's got them. I know that you probably want us to re-say them. 18% rise in EBITDA, 1.9 billion. Great. Hotels, everything. The one word that sticks out to me is steady economic recovery. Encouraging. I'm surprised it's not a more bullish set of rhetoric. Is this a restrained guidance?
Well, look, the reality is we've been doing very well in terms of recoveries in the region, in the UAE in particular, and we've seen excellent, I would say, excellent prospects that are materializing last year and this year, and it continues. This being said, I think we need to be extremely prudent about what's happening around us. We're not in a world where things are rosy. We are in a world that is in the most difficult times ever. We have inflation that we're finding very difficult to master globally. And we have very worrying signs on inflation and what it means in terms of cost of money. We're also seeing supply chain issues worsening, not getting better. So in reality and we don't see any solution in the horizon. So this part of the world has been doing well. It is young, it is vibrant. There are, I think, much more fiscal capabilities that are here and headrooms, but the reality is we need to brace for what's coming.
Okay, I think that's a very measured and restrained way of putting it. Let's dig a little bit deeper. The inflation. How are you dealing with inflation? Where is it most manifest in the business? Is it in your energy costs? Is it in your wage bill? Where is inflation on the input side, first of all, in the business?
So I would say geographically, we're seeing less impact in the UAE and Saudi Arabia than we're seeing elsewhere. So that's number one, because there is more headroom to deal with it. And I think governments in the UAE and Saudi Arabia are doing much more in terms of reining in inflation. That's number one. Number two, we're seeing it across the board, whether it's about cost rising, energy, construction costs, or food. So we're seeing inflation manifesting across the board. We've been actually trying to rein it in for a very long time. This is not new.
But are you passing those inflation pumps on?
So we started to pass it on. We have reined it in for about a year plus, and now we're starting to pass it on in a measured way, as much as possible.
Beef up measured for me. I mean, are you passing on 5%? Are you passing on double-digit inflation increases across?
Well, I would say on grocery, for example, we've got some items where you have caps, and these caps are agreed with governments across the board, and some others where we don't have caps. But what we don't want to be is in a situation whereby we are unable to provide certain items because of inability to pass on inflation. But I have to say, conversation with governments have been constructive.
Any sign that this, because inflation has arrived. We just got the data the other day. We're up in the 7s now. It's arriving. My Uber's more expensive. My delivery food is more expensive, etc. I'm not saying I'm feeling a desperate pinch, but I am noticing it. So is the basket size getting smaller? Is there any incremental change in the grocery business? First of all, deal with that.
We're seeing people shopping more, but shopping less every time. So average basket is definitely getting smaller. It's shrinking.
On the retail side, China, Japan still not back. How much of a, I suppose, restraint is that on a full recovery for you in the mall business? Is that the headwind?
I would say the mall business is actually doing well. The biggest issue, and tourism is doing well, so that's fueling it definitely. The biggest issue that we need to face is supply chain.
You say it's getting worse. Where and how?
Well, a number of things. One is it's actually manifesting itself in the sectors that were not there before. I think that's important. Construction is very important, but we're seeing some offset in terms of projects being cancelled, delayed, relooked at, etc., etc. And the other thing is, I would say, general supply chain issues across the board. So delays for supply are now at least doubled, if not more. So we need to think forward, which is impacting our working capital, but that's something we're managing.
What about the rents in the mall? I mean, the malls are beautiful, they're full, they're absolutely chock-a-block, but how are the rents? Are rents going up? 5%, 10%? What are you getting there? Any space? Is there any space available left in your malls?
Not fast enough. I think if you look at...
Rents aren't going up fast enough?
No, they're not. Space are out. Rents are not coming back fast enough. If you compare them to actually sales, you see that sales are about 21% up, but actually rents are not yet following time. But there is always a lag time on that one.
Given it's a very measured conversation from you this morning, a sort of almost slight words of restraint, don't get too excited. Are you delaying any project expansion, or are you still, man, I'm fully engaged in all my expansion projects, I'm not moderating at all?
We're not delaying any project expansion. We're looking very carefully in order to make sure that we outmaster the cost, especially for big construction projects going forward. So more conversation, more in-depth conversations with our partners in order to make sure that we don't have surprises down the line.
When will you complete your project in Saudi?
So Saudi is announced for end of 2025. Around that, and exactly the month are not clear, and this is ongoing as per schedule.
And obviously, the single biggest economic lever, yourself and Emirates, in this economy, you know, when you squeak, the wheels of this economy change. What about succession within Majid Al Futtaim? What can you update us on that? Has there been any shift in terms of the succession strategy?
Succession happened. Mr. Majid Al Futtaim unfortunately passed away in December 2021, and succession happened. His family are now owners of the group. And
is it a
business as
united
usual.
family? Is it a harmonious succession?
Well, I would say it's a succession like any other. The family is actually extremely committed to the stability of the company, and we're working together in that transition. It happened well. It took place, and basically business as usual, and you can see the results.
Yeah, and the results are very self-evident. Everything's for sale in the UAE at the moment, from Salik to your water. What part of Majid Al Futtaim is actively being looked at for an IPO? Realistically, Ala, it's the one story anybody cares about in your business. So which part of the business is it that can realistically be IPO'd, and when?
None. None is realistically now being looked for an IPO. If there's anything, we'll announce it. As always, you always ask me this question. It's a valid question, but it's not there yet.
It's a fair question.
It's a very fair question. It's not there yet.
How are the penguins?
They're doing much better.
Okay. He invites Hadley Gamble in to look at the Penguins. He doesn't invite me in. Alain, thank you very much. Alain Bajani there, not looking to IPO anything within the Majid Al Futtaim family. Plenty more ahead on Daybreak Middle East. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
Live shot of the Emperor's Palace in Tokyo, and the Prime Minister Kishida there is announcing to reporters Japan will ease some of its border-related controls related to the pandemic. So again, this is building incrementally on the Asian nation stepping back from some of the most restrictive border controls out there. Okay, we'll keep an eye on that story. To the SET Thailand Focus event, it's underway, it's in Bangkok. Haslinda Amin is there first. She's on the ground with the CEO of one of the world's leading food producers. Haslinda, good morning, good afternoon.
Hey, Manus, good morning. An important conversation because food prices have remained elevated, contributing to inflation. Of course, the other important thing is that food is my favorite topic. Let's delve more. Prasid Bundong Prasa, CEO of CP Foods, is here with me. Good to have you with us. Kun Prasid, we talk about elevated food prices. Will they persist? When can we expect food prices to eventually ease?
The food prices, I guess that, it depends on the raw material of the corn and everything. So we believe that due to the high price right now, it's extremely really high on the corn price and everything. That's why it's pushing on the meat price going high, and then from the meat price go back to the, the ready to eat, ready to cook food. It's all going up. So I believe that, it would take a year and 2 years to, for the corn price to be more reasonable at reasonable price. It may be related to the Ukraine situation, whether they can go back, growing the food, and then export to other countries. That would be helping the pressure going down significantly.
Is there a sense of how much food prices will rise? Do you see an increase of 5%, 10% from here?
Oh, the price increase actually now more than 5 or 10%. Is maybe 10 and 10 up right now. That would be the price increasing. Yeah.
You've benefited from very high pork prices in markets like China, Vietnam, as well as Thailand. Yes. Do you see that persisting? And how are the supply chains looking right now?
The supply chain is the availability of the meat is reducing, especially on the swine business. Partially, mainly, is because of the ASF, a disease that happened. It would take a couple of years because, in order to recover from the ASF, and also, the confidence that the farmer would have to coming back to raise the pork again, it would take some time. And also the demand, I think the situation of COVID is getting better. So now there's a bit more demand on the meat size. That's why the price increase on that part. Yeah.
You have a significant presence in Europe. With Europe expected to go into a recession, would you have to review your projections for that market?
The European, we are changing our strategy a bit more. Instead of exporting our fresh meat to European country, I think they would have the limitation right now due to a situation in European country. So now we focus on the cooked food instead of raw material. And then would that be more value added for us as well? Yeah.
So what does it mean for your earnings, though? I mean,
it's getting better actually from European country. Now instead of meat, we export the ready-to-eat cooked food. This year we grow 20% into that area, or into the European country.
You've been expanding. In fact, now you have a presence in Turkey. How is that market doing?
In Turkey is improving a bit more, but the one that we are focused more is actually UK, German, and another new country that we have been expanding for the past 5 years, and the performance is very good. It's Filipino. Filipino have so many people in that country, so we would focus more and more in the Philippines in the future. Yeah.
Right. What are the risks to your business right now? I mean, you talk about focusing on Germany, for instance. It is yet an economy that's undergoing a lot of challenges.
Yeah. There is a challenging and also somewhat because we export the product here to Germany, then we believe that due to the oil situation, gas station in US, in Germany, exporting from here would be more competitive from the point of view of us exporting our product from Thailand to Germany and to UK.
As part of your new strategy and as part of your growth strategy, you've gone into plant-based meat. What kind of demand are you anticipating? Which markets will drive that growth?
Since we are from Asia, so that we will have to make a confidence in the Asia market first. We have been launching our product in Thailand, which is really good outcome. We like 50% market share right now in Thailand, and we also expand to like Singapore, Hong Kong. We have been, we plan that this year, toward the end of this year, we should be able to go to like Japan and European country. We have been discussed with so many retailers already, both in European country, in Japan, and hopefully, we can start a big thing in US next year.
Khun Prasit, we've been talking about the King dollar. How have you been impacted by the very strong dollar, which may remain at such elevated levels for quite some time?
Yeah, the strong dollar is luckily, let's put it that way, we have the import and export together. The strong dollar that we have, it would not impact that much in our real performance. But sometimes when we reporting the report, it may impact in terms of accounting performance only, but not a real cash performance.
Just one final question before we go. Of course, we're assessing the state of the Thai economy here at this conference. Are you upbeat? Could perhaps the government do better than the projected 2.5% growth for the year?
Actually, I believe that our government doing quite a good job in the past 5 years. In the past year, like COVID situation, they do a very good job and still, manage the situation very well. That's why our Thai people are very safe from the COVID. And I do hope that the Thai economy should coming back really good, because especially the tourists. I heard that the tourists coming back significant more. Hopefully, by the number that they're talking about, they would maybe reach like 2 million people at the end of the December, and next year, hopefully they come like 4 million before what it have been before.
Khun Prasit, thank you so much for your time today. Prasit Bundong Prasa, there, CEO of CP Foods. Of course, this is one company that is controlled by the richest family here in Thailand. Manus, for now, handing it back to you.
Haslinda, thank you very much. Great insight there in terms of what's going on for the producers of the world. Haslinda on tour in Bangkok. More across the shows right here on Bloomberg.
อินทรีย์ไม่ได้มีดีแค่ปูนการที่เป็นอินทรีย์ติดแน่นติดนานติดใจ
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Strong enough to stay, we will never.
Day after the Bank of Israel raised its rates by the most in almost 2 decades, a key member of the Monetary Policy Committee told Bloomberg that the central bank will remain on an aggressive path. Simone Foxman is in Doha for us today, tracking the story. So some pretty hawkish statements from the Deputy Central Bank Governor.
That's right. Andrew Abir giving a great interview to our colleague Daniel Avis, and his message, curb inflation now rather than pay the price later. That's what he told Daniel Avis. And that essentially discussing the idea of front-loading rate hikes, more coming in the next couple of months, even after this 75 basis point hike we saw earlier this week. And so a quicker tightening cycle rather than a long drawn-out one. Mind you, this is already the longest tightening cycle we've seen since at least 2008. But it gives credence to projections like the one we heard from Citi after the actions on Monday that we're going to get large rate hikes still to come, 75 basis points. Next decision in October and also in November is their projection. We did hear from the Deputy Central Governor about when exactly he expects inflation to come down. He says he doesn't see a significant decrease until the end of 2022. But, good to note that those would come down, prices would come down by the end of 2022 a little bit, not necessarily waiting into 2023, Manus.
And Qatar Energy awarding several major solar contracts. What are the details there, Simone?
Yeah, 2 engineering, procurement and construction contracts, EPC contracts, going to Samsung C&T. The solar plants will generate 875 megawatts of renewable electricity that will double Qatar's capacity for renewable electricity over the next couple of years. I point this out because the big question here has been what happens after the World Cup? What happens come 2023? Where is the investment going to come from? And one of the key places a lot of people have been talking to me about is the capacity for renewable energy, potentially making the grid power all and more energy efficient. So we're starting to seemingly see some impetus towards this renewable energy push. Question mark remains, are there more deals ahead? Because this deal, while it's not a massive size, does indicate at least the desire to push more into the solar space, to the renewable space.
And let's just touch on Iraq briefly, because it appears to be escalating, political crisis escalating there. What is the latest?
Yes, it all started with protests last month outside of Parliament by supporters of Muqtada al-Sadr, an important Shia cleric who won the most votes in last year's election but couldn't form a government. Now those protests appear to be escalating, moving to outside the Supreme Judicial Council. His supporters calling for a dissolution of Parliament and for the chief of that council to resign. One of the questions we've been asking as we've discussed this crisis is what impact does it have on markets? Does it have any notable, tangible impact? And I would point you to an Iraq that's already producing less than the OPEC quotas, and the fact that political crises have been to blame in part for the reason we haven't seen oil majors continue doing business there. We've seen Exxon and Shell sell their stakes in the last couple of years. Lukoil and BP have already said they want to as well. So if you continue having these political crises, even if you don't have violence, which is the true fear here, you may still see an effect effect on Iraq's long-term production of oil. BNEF, for example, coming out and saying they think it's highly unlikely that Iraq will produce the 6 million barrels per day target that it's targeting for 2027, just given everything that's going on in the country right now.
Okay, Simone, as you say, that underproduction by a number of OPEC members is a big issue when it comes to that thin buffer that they have in terms of excesses. Simone, thank you very much. Simone Foxman there at the Qatar Financial Centre in Doha. Now, if you gorged in this Summer of Love rally, hopefully you did it in tech, because the hedge funds did. This is what, beautiful story. Goldman Sachs have looked at some of the major hedge funds out there. They've loaded up on mega tech. This is NY Fang, by the way. Hedge funds, the average weight in mega tech now, their top 10 positions is up by 70% in tech. And they've switched Amazon as their alpha over Microsoft. I mean, Amazon up 26% in the last quarter. They've been loading up on Nvidia, Apple, Al Lanson, and Tesla. Is tech still king as bonds trade through 3% on 10-year paper?
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Good morning from Bloomberg's Middle East headquarters in Dubai. I'm Manus Cranny. This is Daybreak Europe with the stories that set your agenda. A call for control. The Fed's Neil Kashkari says the central bank will need to maintain tight monetary conditions as global economic data signal growing recession concerns. Cautious moves. U.S. futures are lower, but the dollar firms as investors look ahead to the Fed governor's policy indications at Jackson Hole. Filling the gas gap, German Chancellor Scholz taps the, quote, boundless potential of hydrocarbon imports from Canada in a deal with the Prime Minister Trudeau, but still needs a short-term solution for the gas crisis. As it just goes 8 a.m. across the Emirates, warm welcome to the show. With the PMIs floundering, you need to ask yourself whether this is a natural pausability moment in growth or whether there is something much more malevolent and sinister abound in the equity market. S&P 500 down slightly this morning, down by 1/8%. U.S. home sales the slowest since 2016. PMIs tank in the U.S. on the services side. And mortgage rates in the United States of America are now 5.65%. A year ago, in January, they were 2.65%. NASDAQ is down 1/8% as hedge funds load up on mega tech in the second quarter. DAX down by 0.4%. Yes, you may have a gas deal for 3 to 4 years' time, but nothing for this winter, when there will be outages and caps, and Eurostoxx 50 down by 1/8% as the PMIs really do disappoint around Europe. How malevolent is that? Let me show you what's going on with the underbelly of risk across the assets. You've got yields rising, Kashkari channeling rhetoric that we may need a Volcker-esque style response mechanism to unanchored inflation, if that's what we get, and that's quite disconcerting for the bond market. Short end of the curve up this morning in yield, 3.30. Brent down by 0.4%. The euro-dollar still sub-parity. And cable at 118. JP Morgan say 114 could be on the way if those gas prices keep getting out of control. So we're in an affirmative risk-off narrative. There's an oxymoron for you, instantly created. Let's get to the team. Enda Curran is in Hong Kong. Neil Kashkari's comments are for him to digest and the global economic downturn. Birgit Jennen is with me from Berlin with the very latest on the German gas crisis. Jules, as ever, is in Singapore pulling it all together with currency moves and equity convulsing. Let's get, first of all, to the Fed speak. Minneapolis Fed President Neil Kashkari says action from the U.S. Central Bank is still very much needed in the fight against inflation. That comes as fresh data showed business activity in America continuing to contract for the second straight month in August. Bloomberg's chief Asia economics correspondent, Enda Curran, is with me now. So the data is certainly something to worry about because it's building on the downside. And I would say Kashkari talking about a completely unbalanced situation shows we have miles to go before we sleep at the Fed.
Yeah, miles to go, man. As Kashkari's comments were as hawkish as could be. He warned about inflation expectations becoming unanchored. He said the current situation is unacceptable. He explicitly said they want to avoid a Volcker-type situation whereby the Fed really has to aggressively hike rates by the pace the former chairman Paul Volcker did. So his point was that they have to go hard and go hard now. The reason his comments are also significant is because, of course, Kashkari was something of a dove on the Fed, and it shows you how far they've travelled now in terms of the fact that he's become one, or at least joined the hawkish side of things. He made those comments, by the way, as you mentioned. We are getting signs of softening in the broader economy in the US on the manufacturing side of things, clear signs of weakness in new orders and in employment there. But nonetheless, Kashkari's on the hawkish side. We'll have to see now if Chairman Powell cements that hawkish message with his speech on Friday.
And in terms of the rest of the global recession watch, you've got Japan, the UK, the US. I mean, there is this cacophony of data that's coming. Do you think that's enough to cause some kind of temperance in language at Jackson Hole this weekend?
It's a big question, man. It's clearly globally data is in sync in terms of its slowdown. We're seeing that obviously in the European manufacturing sector being hammered by energy prices. Obviously in Asia, China's leading the slowdown, but weakness in Japan, weakness in Australian services, by the way, contracting for the first time in 7 months. So when you take it all together, you'd have to say, wait a minute, this global economy is certainly buckling under the weight of both inflation and, of course, rising interest rates. The thing is, though, even with some hints of inflation peaking in different economies, the broad story remains that inflation remains very high, be it the US or be it anywhere else. So you'd imagine, just as Kashkari said, the Fed officials will remain determined to keep raising rates until they get inflation back down to target. In fact, Kashkari made that very point. They can't stop until they get inflation back down to 2%. That surely indicates interest rates have a long way to go. That won't be just for the Fed, it will be for the rest of the world too. And it does suggest that the slowdown in global growth still has a way to go too.
Well, of course, that's got an impact on what unemployment rate are you going to tolerate. And we'll put that question to a Nobel laureate in just under 20 minutes. Enda, thank you very much, Enda Karen, with the very latest our Asia economics correspondent. The Canadian Prime Minister Justin Trudeau and the German Chancellor Olaf Scholz signed a 5-year hydrocarbon deal on Tuesday. The Green Energy Agreement was inked on Scholz's final day of a 3-day visit to Canada. Birgit Jenen is our Berlin bureau chief. She joins me now. Birgit, good to have you with me. So, the detail on this, it's a long-term solution to a short-term severe issue, isn't it?
Yes, exactly. I mean, Germany is basically forced to undergo a massive transformation in its energy policy. And Germany will, that is clear, always remain an importer of energy. So it's now looking for long-term as well as short-term solution. The deal struck yesterday is clearly a long-term solution, which is CO2 neutral, and it is looking for getting green energy, green hydrogen to the country.
And 2 German companies seeking relief from the gas levy. Who are they? What do we know?
Well, there are a few companies which have actually applied for the surcharge and basically be a beneficiary of the surcharge. It's altogether 12 companies. But really, if you look at the amount which is going to Uniper and Gazprom Germania subsidiary Wingas, you will see that really these are the main companies which are hit by the cutback from Russia. They had actually not such a long-term contract. They actually had to buy gas at the spot market. So therefore, they are getting almost 92% of the whole surcharge.
Birgit, great to have you with me this morning. That is Birgit Jenen, our Berlin bureau chief, with the very latest on Scholz's trip to Canada. So investors in Asia are showing caution ahead of the Jackson Hole Symposium. Let's get to Juliet Sally. She's in Singapore. I know the currencies are moving. Jules, we'll come to that in a moment. But we've got some of the big houses. We know that they've slashed their exposure to China and Asia.
Yeah, absolutely, Manus. And the China story just keeps getting worse, doesn't it? Now we've got the enterprises index, that Chinex, falling by around 3% in the last 10 minutes or so. That's its biggest drop since May. But overall, we are just seeing this risk-off tone across Asian equities, lower for a 5th session in a row. That is the longest losing streak in around 2 months. We were talking yesterday about that index getting towards that 2-year low as well. When it comes to the China story, as you say, every day there is another bearish call on China, and the property market very much in focus once again. Even though we had that amount of stimulus coming through from authorities earlier in the week, you had today one of the developers, Logan, in Hong Kong, plunging by almost 60%. So just continuing to show how much of a worry a lot of these companies have. That's weighing in on the Hang Seng Property Index. And the Nikkei coming back a little from some of its earlier lows. That's after we heard from Prime Minister Kishida in the last 20 minutes or so, saying they are going to scrap PCR tests for incoming arrivals. So just really trying to make it a little bit easier to get into Japan, Manus.
And Jules, in terms of the currency move, I saw Mohammed El-Arian put out on Twitter yesterday, you know, at any other time we would have been scraping, you know, nail scraping, going currency devaluation, beggar thy neighbor. But the yuan has had some pretty punchy moves. Talk us through them.
Yeah, absolutely. The yuan holding near that 2-year low. You did have a stronger fix coming through from the PBOC today. So does that suggest that they're not that happy with the weakness that you have seen in the Chinese currency? But of course, it's very much a balancing act when they're trying to stimulate the economy too. Certainly a weaker yuan today, off by about 0.25%. And when you look at the overall risk barometer ahead of Jackson Hole, you're seeing the Aussie sell off against the yen too. Where there is a bright spot is in the South Korean won. That is rising after 6 sessions of losses. More jawboning coming through from authorities, from the South Korean finance minister there. And then Haslinda Aman was speaking to the Bank of Thailand governor too about the risk to the Thai economy. They're certainly very much worried that if you don't see the pickup in tourism, that's going to dent that economy. But they say the pace of rate hikes in Thailand is okay for now. The Thai baht, though, down about 0.25% against the dollar. So among the laggards in EMFX, as we see once again the dollar in focus ahead of Jackson Hole. Manus.
OK, Jules, thank you very much. Great work. Let's keep an eye on that. On the Aussie crosses, I know that's close to your heart. Juliet Sally there with the very latest on currencies and markets. Now, when it comes to a disgruntled employee who was fired earlier this year, he's turned whistleblower. His name is Peter Zatko, and he's at Twitter. Stock down 7.5% yesterday. Why? Well, Smudge, as he is more colloquially known within the company, or Mudge, I should say. This is the accusations. Egregious deficiencies in Twitter's defenses to hackers and lax approaches to security. He also warned that the servers were running on out-of-date software. Cash bonuses were being paid as much as $10 billion tied to increasing the number of daily users. That is what was paramount for Twitter. Now, the other major point in this whistleblower's accusations, which has caught the national security risk, is that roughly half, according to these claims, half the company's workforce had deep access to Twitter's controls. And this goes to the heart of the issue of Elon Musk in terms of bot building, etc. Now, I want to show you Twitter's response because it is important to say, A, that Peter Zatko, these are allegations from him. He was fired in January for ineffective leadership and poor performance. And this is what Twitter had to say in response to these whistleblower accusations. What we've seen so far is a false narrative about Twitter and our privacy and data security practices that is riddled with inconsistencies and inaccuracies, and it lacks important context. And I can also tell you, in subsequence to that, the CEO of Twitter, Parag Agrawal, is on the tape as saying, we have a new story out right now. Go to your Twitter ticker. The CEO says the complaint will make employees work harder. And he goes on to talk about this individual who was let go. And I know that all of you will take a lot of pride of your work and work together in the values that guide us. And we will pursue all paths to defend our integrity and that of the company to set the record straight. So this one will run. It'll certainly embolden Elon Musk in regard to his defense about the truth and reconciliation, so to speak, in terms of the number of people actually genuinely using Twitter on a daily basis. Feel free to follow me. I'm open to anybody, literally. Let's take a look at some of the things the markets will be looking at, probably not my Twitter account. 1:30 p.m. UK time, we're going to be seeing the US data hit the tape, durable goods orders on the back of those PMIs yesterday. It's going to be closely focused on the manufacturing side. 3:30, the EIA releases its weekly oil inventory report. Big drawdown yesterday. That's what shuffled the market higher by 4%. Later in the day, we're going to get reports from Nvidia, Royal Bank of Canada, and Salesforce. Also today's a very historic day in Ukraine, celebrating Independence Day. That coincides with the 6-month mark of the Russian invasion of Ukraine. Coming up in the show, I've got the CFO, Fabiana Fideli. She joins me on markets. Plus, we'll speak to some of the finest economic minds out there. We have 3 Nobel laureates joining the Bloomberg family this morning, beginning with the 2010 winner, Christoph Pissaridis. He joins me later this hour, right here on Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is crucially important, and I think we've moved from this attitude from it's almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
I think it could be a couple of years. I mean,
really?
If you get to the mid threes or maybe even a little bit higher, and then you stay there, because I think while inflation will look a lot better a year from now, I think it'll still be significantly above the target, and ultimately they do want to get back down to pretty close to 2%.
Goldman Sachs chief economist Jan Hatzius with the Bloomberg team. Joining me now is Fabiana Fedeli, CIO for Equities and Multi-Asset Strategy at M&G. Fabiana, great to have you with me. So let's jump off with Jan Hatzius' proposition. Mid-threes, that's not outrageous. I'm looking at WIRP, 3.75. And then we drift. We sort of like hold in the mid-threes. Do you see that as an evolution of Fed policy? Good morning.
Good morning, Manus. Well, certainly what I don't see is that the Fed will rise rates and then will immediately start cutting them. It wouldn't make much sense. Now, that doesn't mean that it will not happen because the Fed has surprised before, but it really wouldn't make much sense in terms of the impact that it would have on risk assets. So the truth is that, yeah, most likely we're going to have a 3.5, maybe 3.75 stop sometime in the first half of next year, depending on the data. We're all data dependent, including Mr. Powell and then Chairman Powell, and then we will probably stay there for a while until we feel more comfortable with what happens to inflation.
So I sent myself a WhatsApp last night because I tend to forget great moments of divinity. Well, they're not great moments, they're just moments of thought. US home sales are the slowest since early 2016. PMIs slapped on services. And around the world, you have a similar story, which then made me begin to think the trajectory for rates, even though Kashkari talks about we need something Volcker-esque. Does the data from yesterday create a lower run rate on rate hikes, 50s and 25s versus 100s and 75s in your mind?
You know, the data from yesterday, first and foremost, was particularly interesting because you saw that the reaction on markets was particularly lukewarm. And, markets, equity markets in the U.S. didn't go up thinking that this would change the mind of the Fed, didn't come down because they thought that the data was far too bad, which really means that markets have their eyes peeled on what Chairman Powell is going to say on Friday in Jackson Hole. I don't think this is going to change the resolve of the Fed. The Fed is really looking at inflation, particularly core inflation. If anything, when we saw the latest data on inflation and the market took it very positively, if you would have looked at core inflation, you realize that the Fed was still looking at that. Pressure is still there, wage side, service side, shelter side, and therefore they will continue with their rises. 50, 75, that's probably the choice.
Okay, look, the market gorged on equity risk. We thought inflation had peaked, the Fed would blink, and so hedge funds gorged on big tech. This is in the GTV library for anybody. This is the Goldman Sachs narrative this morning. Hedge funds loaded up on mega tech. They're using the NY FANG index relative to the S&P 500. In this summer of love, so to speak, did you gorge, did you feast on equity, or did you shave risk because you thought, nah, I'll take this as an opportunity to trim back and build cash?
Actually, if you remember, we started the summer of love, as you define it, with equal to equal weight to overweight position in equities, and we were really much more focused on the stock idiosyncratic risk. More recently, about a week ago, in our multi-asset strategies, we've actually started to take some profit out of our equity positions and moving them back consistently to a more neutral stance. That's because we think that markets will probably retrace the low points that we've seen in June and July. The exuberance that we have witnessed in the last few weeks or so is probably destined to taper off. We don't see much more than that in terms of a downside at this point, hence the close to neutral position, but we do feel that there is a retracement to come.
And then we were just chatting in the break, and you said, of course, you've seen some outperformance in emerging markets relative, let's say, on a relative basis to the US. Where was the standout for you? And I ask everybody these days, how are you doing? Are you living without China? Does that fit into your EM basket, or does that live on its own in splendid isolation to channel Disraeli? To the EM question, first of all, where stood out?
If you look at EM markets, for once, the global equity markets have shown that the asset class is not homogeneous. You've seen markets such as India, such as Indonesia, such as Brazil doing far better than even the S&P 500. Some of it is due to the exposure to the commodity overall asset class, but some of it is just due to the fact that these are markets that have already taken actions when it came to working against inflation and increasing rates, and there is a certain stability that we haven't seen, for example, at the time of the taper tantrum. So I would say that is a standout to me. You also have to define emerging markets. If you define them as the 20-odd markets of the MSCI in equities, they actually have done fairly well, most of them or many of them. If you're looking at the broader frontier market indices, that obviously is a much weaker cohort. So there is quite some interesting places to pick from.
At what level, if at all, Fabiano, does currency play into your discussion with the team? And I ask that question because you've got some significant moves, haven't you? From yuan depreciating to euro breaking parity, sterling getting crushed, and the dollar. There is no sign at the moment of dollar exhaustion. So just contextualize foreign exchange within the dynamic of equity. Everybody always says, oh, no, I never look at FX when I'm putting the construct together. But is that the same for you?
Manas, you really cannot separate equity investments from, and even fixed income investments from FX. And the trends that you see. That is also why we're really looking at stock idiosyncratic risk. We're very careful with our positioning, and we are looking at companies that are not really affected by large moves in currencies. One of the things that you've seen, for example, in emerging markets is that most currencies have moved, but not had the dramatic moves that you've seen. And again, these are not frontier markets, but really larger emerging markets haven't seen the large moves that we have had in the past. If anything, the euro, the pound have had large moves themselves. So you really cannot separate that.
I just want to briefly touch on German power is the equivalent of $1,000 a barrel. It's the equivalent of $1,000 a barrel. How perilous a state is European equity markets facing in the back quarter? Briefly.
We were concerned about the macro side of Europe. This doesn't mean that all equity markets are going to be impacted. Don't forget that a lot of the European markets is also outward facing, and obviously a weaker euro is going to help many of these companies. But we're definitely concerned about consumer demand within Europe, and also the possibility of power cuts that will affect industrial production.
Fabiana, thank you so much. European power is equal to $1,000 a barrel. Gruesome. Fabiana Fedeli, CIO for Equities Multi-Asset Strategy at M&G. Coming up throughout the morning, we're going to speak to some of the finest economic minds there are. We have 3 Nobel laureates joining the Bloomberg team, with the winner of 2010, Christopher Pissarides. He joins me in just a few moments, right here on Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
It's Bloomberg Daybreak Europe from Dubai with me, Menace Cranny. Now, in moments of great existential angst, I used to hide under the desk when I had an error, but maybe the more appropriate thing to do is to be long of the dollar. It's foolish to fight the dollar's dominance, and that is pervasive. Euro still sub-parity. Cable 118, JP Morgan Private Bank said you could say 114 is attainable if the gas prices keep rising. And dollar yen, of course, going to Jackson Hole, I think it's going to be the much bigger protagonist. Let me just show you what's going on with vol. It's rising, but a small break of trend. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning from our Dubai studios. I'm Manus Cranny. It's Daybreak Europe with the stories that set your agenda. A call for control. The Fed's Neil Kashkari says the central bank will need to maintain tight monetary conditions as global economic data signals a growing recession concern. Cautious moves. US futures are lower. The dollar firms. Investors look ahead to the Fed governor's policy indications at Jackson Hole. Filling the gas gap, German Chancellor Scholz taps, quote, boundless potential for hydrocarbon imports from Canada in a deal with the Prime Minister Justin Trudeau, but still needs a short-term solution for the gas crisis. Warm welcome to the show. Equities are on the back foot this morning. We're getting confirmation of divestment in China. You've got a weakening scenario there. European and global equity markets are on the cusp of recession. If you look at the PMIs, US equities are lower. House sales are under pressure in the US. Mortgage rates are at 5.6%. PMIs are the 2020 low. So you are looking at US equity futures lower. NASDAQ down 1/8%. Europe is set for a lower opening as the equivalent. German electricity is costing the equivalent of $1,000 for a barrel of oil. I'm going to say that twice. German electricity is priced at the equivalent of $1,000 a barrel. Do the economics on that. Stocks 50 down 1/4%. Roll it over. Have a look at oil. We brought out the big guns in terms of His Royal Highness ABS to put a floor, or the OPEC put on the oil market yesterday, but there was a drawdown in inventories that bolstered the market at one juncture. The oil market this morning giving back 0.4%. It's recessionometer rather than floorometer. Yields turned just over this morning, as you hear Neil Kashkari talking about a situation which is completely unbalanced, and we may need a Volcker-esque style moment in markets. Eurodollar still subpar, and JP Morgan banker saying you could hit 114 if the gas crisis continues in the United Kingdom. Not just gas, but energy crisis and electricity crisis. 114. Oh. The Minneapolis Fed President Neil Kashkari says action from central banks is still very much needed in the light and the fight against inflation. Now, that comes despite fresh data, as I say, showing business activity in the US contracting for the second straight month in August. Bloomberg's chief Asia economics correspondent, Enda Carring, joins me now to contextualize the data and the hawkish narrative from the archdove Kashkari. And just lay out the situation for me, because I'm just about to talk to Christopher Pissarides just on how perilous a moment are we in the global economy.
Well, on the global economy, Manus, there does seem to be something of a synchronized slowdown now that is deepening by the day. We had US PMI data last night showing a weakness there, in particular a weakness in new orders and in hiring intentions. That's interesting because, of course, the strong US jobs market really has been a bulwark throughout this, so maybe it's indicating some softening coming down the line there. In Europe, of course, PMIs are buckling under the weight of those sky-high energy costs. And then in Asia, obviously, the slowdown is being led by China, but there's weakness too in Japan, weakness in exports from South Korea and Taiwan, and in Australia, the services sector there contracted for the first time in 7 months. So when you take it all together, this slowdown in manufacturing and the signs now of that slowdown leaking into services around the world does speak to the impact that both the weight of surging inflation and surging interest rates are having on growth. And of course, the global slowdown is expected to worsen as we head into the back end of this year.
And just in terms of Neil Kashkari, when I look at the language that he used at his presentation yesterday, we're in a completely unbalanced situation. We can only relax, and his concern is an unanchoring of inflation expectations. And he channels Paul Volcker. I put it to you, he said we may need a Volcker-esque style movement. This says to me the Fed is far from discounting substantial and more substantial rate hikes than we all seem to have groupthinked ourselves into.
It does speak to the gravity of the moment, Manus. I mean, the backstory, as we all know, is Kashkari is something of a dove, and yet here we are now. He's at the end of the table saying we could be on track to have to replicate what Paul Volcker did back in the early 80s. His central message was that he does not want to see inflation expectations become unanchored. And of course, that's the key for central bank policymakers all around the world, and that's why he's saying they have to go hard now. And by the way, he's not just talking about looking out for peak inflation. He wants it to come all the way back to 2%. So clearly, he's saying the Fed have a lot of work to do.
They certainly do, and miles to go before they sleep, so to speak. Enda, thank you very much. Enda Karen, our Chief Asia correspondent there on the data. Well, the 7th Lindau meeting is ongoing in the economic sciences is currently underway in Germany. Now, this year's meeting brings together no fewer than 19 laureates of Nobel Prize for Economic Sciences. And one of those attending is the London School of Economics professor, Christopher Pissarides. He joins me now. Of course, he won the prize in 2010 for his work on economics of employment and friction in markets. Delighted to be joined now by Christopher Pissarides. Mr. Pissarides, thank you so much for joining us. An awful lot to get through. I'm drawn to the title of your speciality, obviously, on the labour markets and frictions therein. Christopher, when you look at Britain on strike, Europe on strike, wage demands are rising, double-digit inflation is here. Inflation may hit 18% in the United Kingdom. When you see the wage demands being placed before employers at the moment, are we about to evolve into a much more aggressive wage spiral inflation? Good morning, Professor Pissarides.
Good morning. I'm very happy to be here. I'm afraid as much sympathy as I have with workers suffering losses in their cost in their standard of living, and I'm afraid what's happening in Europe is hitting mainly those workers who are on striking on wage demands. The answer to that is not to go for very aggressive wage demands, because